won't slow down, building my empire in this buzzing town, casting my vision on the silver screen, my funded life, a vivid sheen, my funded futures, light the way.
Good morning, traders. Welcome to MyFundedFutures and MyFunded TV. I am Terry Trades 100, and we have our expert traders, Bull Barbie and Nick Does Futures. Good morning, chat. Good morning, Abhishek, Pigeon, Raphael Trades. How are you guys doing this morning?
Doing well. How about you?
Good. You're at the airport. Are you streaming from the airport?
I am. No days off. Company man, right?
Yes, 100%. Team, let's go. Best team in the world. How are you, Barbie, this morning? Oh, you're muted.
She was too busy.
I saw we got a few new subscribers last night.
Ooh, we're at 31,500 subs. Let's go. Let's go, guys. Hit the confetti button. Best community. We keep growing it.
Yeah, he's in that back special holding room.
Yeah, no. Wow, 31. I got 31.6 actually. That's crazy. Where were we at yesterday? 24.
Yeah, I think 24,000.
Jeez.
So we will drop the link so that you can enter for a chance to win a free account. MyFundedFutures will be giving away 20,000 accounts. Absolutely amazing. And of course, we have giveaways throughout the day. We don't know when those will drop. They love to surprise us. Oh, there it is. MyFundedFutures just dropped it. Let's go.
Didn't take very long.
Yeah, that's crazy. 20,000 accounts is kind of wild. People yesterday, they were asking me in the chat, they were like, well, we're doing a sale and like 33% off 100 and 150. I'm like, bro, and what about the 50? They're like, what about the 50? I'm like, you can literally just get a free one. Like, why would you I mean, not a free one, but for $1, right?
Yeah.
So that's kind of insane. So yeah, pretty good deal.
Yeah, so the
Good
deal.
luck to everyone else keeping up with MyFunded. Seriously.
Winning, we're winning. So there is the promo. Use code UPSIDE to get 30% off the new account, the scale 100K size, and then also the 150K size of the scale and the pro, guys. It's 33% off. I picked up a pro account using the special promo, and I passed it last night during Globex, the 150K.
I saw you did. I saw you passed it last night. I saw your tweet. I had to like it.
Thank you. Yeah, I did it with 5 minis. I was like, ooh, this feels so nice to be. So
you traded bait and chilled last night, right? Is what you're saying?
Yeah, exactly.
Asia kind of moved a little bit, I think.
It did, exactly. Who'd like to go first? Let's take a look together. Nick or Barbie?
I'll go ahead and knock it out because I don't really see much. So mine should be pretty quick. First time I'm doing it on one screen. All right. This is kind of my plan for the day. I have these relative equal highs marked off, and then this low down here. I think this is least likely to happen for us to go lower. So the only problem is where we're at right now. I don't really see a whole lot of stuff from price to work from. Because if I drop down to the 15-minute on NQ and ES, this looks pretty choppy. Not a whole lot of gaps in here, not a whole lot of displacement, and we're still inside of that Asia range, right? That's not something I like to see. So I'm basically just watching to see what we're doing. And I think the main reason we're getting, this sort of price action is because we're bouncing in between a bearish gap and a bullish gap. So what I like to do is just kind of look at the hourly, the 4 hour, and just wait to get some sort of move away from one of those two levels that you're trading inside of. And then you can take advantage of longs or either shorts down to this level on the daily. But as for right now, I just don't really see much. I think someone in my Discord was talking about we have an earnings this week. I think it's
Little
I don't
one.
know who is it?
NVIDIA.
NVIDIA. That's what it was.
Just them. Just those little guys. Little mom and
Are
pop.
they're the only ones, right? They're the only ones that's pretty big.
They're the only big ones that I was that I was looking at.
And that's Wednesday after close, right?
Yep.
Yeah, I think it is. So that could be something that kind of helps move the market a little bit because we don't have news until Thursday, Friday. But as for this morning, I just don't really see much. If you guys have questions or a chart you want me to look at, I can happily do that. But I just don't have much in here. So I'm just watching to see if we get a close above this level. Now I can look to target these relative equal highs from Monday. And then obviously previous day high on NQ. Yeah, it's just one of those days. I just come into the market. I don't really know. I don't really have much.
That's all right. Sometimes the market has lots and sometimes it doesn't. That's how it works, right?
Yeah. Thanks, Nick.
I think I'll do better like once September 15th starts. You know what I mean? New lesson, new lesson plan.
But you're not allowed to trade until you've gotten the complete course.
Yeah. I don't know.
So
I'll just
that
demo
always puts a
ball.
little wrench
I'll
in
just
that.
demo ball it.
Are you allowed
Let's
to
go.
demo ball? We'll see.
Barbie,
Well,
what do you see?
I
Yeah,
see
what do
the
you got?
same problem that Nick has with, kind of this lack of news until we get later into the week.
Mm-hmm.
This is, I mean, it's, y'all hear us talk about this a lot, but that's the market needs a reason to move. Otherwise, it's just going to kind of ping pong pitter patter around. And, it's not like these are not important. Consumer confidence, that's cool. Those are all these are still decently impact news. But you have to kind of think about the scale of the different things. GDP is bigger than that. And so is the NVIDIA earnings. So I just pulled up, this is the unusual whales, just because they've kind of got everything in one place, where you can kind of look at it. So NVIDIA is like the largest company in the world right now. So the market is always like waiting with bated breath to see what we're
Did they
going to do.
pass Apple
I think they
in terms of
have.
market cap? I think it's close. It's got to be close.
We'll have to check on that. But yeah, they're going to move the market especially if there's a major.
I remember last quarter or whatever, they beat expectations by, I want to say I think by a good bit, and the market just ripped. So it's crazy how much they move the market. The only thing that sucks is it's always after close. So you can't really trade it, you know what I mean? Or at least for only like 30
you can trade
minutes.
the NASDAQ. I have done that before because the NVIDIA earnings will move the NASDAQ. So we can end up looking at that. But I mean, they're expecting a strong earnings.
Yeah.
So we'll see if they can hit that or not. Of course, I mean, AI is just everything lately. If you've got good AI, you've got good everything. But given all of that, given that the market is waiting on bigger news like GDP, and the reason that the market's waiting on that is that's one of the big numbers that the Fed looks at, and all eyes are on the Fed right now. We got the September meeting coming up. But aside from that, we have the NVIDIA earnings. So there's a lot coming starting late tomorrow. And a lot of the times that just leaves the market just to pitter patter around, I think is the way I put it earlier. But that usually leads to either chop or drift. So I'm trying to put everything like, if we're going to chop, where are we going to chop? And if we're going to drift, where are we going to drift? And we moved lower since the week opened. We opened the week up here. And we've moved lower, but we've moved lower to support. So it's not easy to just say we can continue the move lower, even though I think it's as decently likely that the market wants to check into the 42.20s. Didn't quite get there. We got around 30. It doesn't have to. It can just chop in the middle. And I'm really looking at this Friday candle or Friday set of candles. But we had this major move on Friday, and the market's kind of checking prices inside of that candle. And so that's kind of the mode that we're in. Even though we're in a little bit, it starts to look like a little bit of a downtrend on this hourly, but the mode is checking price inside of Friday's price action. So inside of that, I see that we still could check lower. We've got major support down here around 64.25 on ES. If it breaks this support, we've got some air gaps lower and price could move kind of quickly. But I think it's more likely that price is just going to want to continue to chop back in here. The major level that I was looking for before it was really my target from last week. It was a 64.68. And so I'm still really looking at that level. I'm wondering if we're just going to kind of find a spot to chop. And sometimes when that happens, a range will set in, but we don't see it until kind of the morning session has completed. And then sometimes we can pick up little stuff inside of chop like that. But chop is one of the main scenarios. The other one would be just a drift. And that sometimes the market just likes to drift up and it's really confusing because it doesn't give you a great entry, but it's really just checking all those levels that we've already traded. So I'll just kind of enter when we're breaking out of one and just a quick little trade to the next one, that sort of thing. But that's what I'm looking for today is some quicker trades that I can do kind of inside of the other main price action that we've had recently. And I'm not looking for any major new breakout or anything too fancy. I think the market's going to try to behave a little bit today.
All right. Thanks, Barbie. Chat, what are you guys thinking? Long, short, or no trades today? Let us know.
I see Infamous Trader is going to watch for that seek and destroy move to fade.
The up and then down. Full port.
It could also be the other direction, I think.
Oh, good morning to Pine Tree Trader and also Vala Trades in the house. Good morning, guys.
Good morning.
Good morning.
Good morning to Trading Ranch, too. I do believe they're joining us today. Lots of Trading Ranch.
Someone asked me about bonds, and then someone said, looks like today could be a range-bound day. Let me look at bonds real quick. I'm also going to check out gold because I know there's definitely some gold traders in here. Plus, I want to check out my chart. I draw my lines and just kind of wait and see what happens because it's just a consolidation. Bonds to me kind of look, they kind of look pretty bad as well. Just a lot of range-bound conditions. I see a lot of trend line liquidity here. I would not be surprised if we. Man, I don't really like this chart either. It's just the daily. What about the 4 hour? Yeah, I could see the 4 hour doing something like this, running up and taking out all this trend line liquidity. So I'd probably lean bearish on bonds to be fair. Let me check out gold real quick. So daily chart, that's kind of funny. So if you guys remember, I marked off these relative equal highs. It looks like we're wicking away from it right now. From Friday and Wednesday, August 13th. I'm going to leave this on here just to kind of see what happens because I called this last move up here. And the main reason of how I can do that is because it's in a consolidation market and it's just going to run highs and lows. And it's not really going to respect any sort of order flow. So I'm not really anticipating for it to close above this high because it didn't and then trade higher. I'm kind of expecting these conditions to continue until one of these higher time frame external highs are broken, right? That plus news, right? So yeah, I'm kind of expecting a move down to here, to be fair. But if there's any other chart, but yeah, let's try to see if we can get the 35K by end of today. We should be able to do that, right?
Right. Let's do it. 35K before end of the week. Let's go, Marky says. So the overnight news. Did you guys hear?
No, what was it, by the way?
Yeah, there was like a big spike down during Globex. It was when I was trading.
Oh, that's right.
Yeah. So Trump fired Cook. I'm not sure how it came out. I didn't read the headline, but that is the rumor on the street. Lisa cooked is what Zepside said.
What time did you start trading last night? Did you trade in Asia during all that volatility or what?
So I started during the opening of Globex. Like I've been kind of looking at using some discretion with like the 5-minute opening range during Globex, just watching it. Sometimes I'll take that trade. And it's been working sometimes, but obviously nothing works all the time. So I will look at the first 5-minute candle of Globex. So I was, trading, watching, and then I started here. I can show on my chart. So here is the opening of Globex right here. Sorry, my chart looks kind of small today. And then once it started kind of fading this, I was thinking that if we broke below this, so this is an MOC candle, a death candle. This was at 5 minutes to the close, you guys. In 5 minutes, incredible. Almost a 50-point candle. So I was thinking, well, we could give back some of this big pump that we had on Friday. So I hopped in short with 5 minis, and I was in it. It was working, just letting it run. I was, doing some dishes, getting dinner ready, and then boom, in this candle. And this was the news candle. So it hit my TB basically.
Oh, sorry. You saw him?
Pretty good.
Yeah. MyFundedFutures said Terry liquidated everyone. One day, that would be absolutely amazing to be able to trade with that big size.
The Globex Open is the Asian Open.
Yeah, it's very tricky to trade. I don't recommend
Is that
it.
8 p.m.? Is that 8 p.m. or 6 p.m.?
It opens at 5 p.m. Central Time, so 6 p.m. Eastern.
Okay, 6. Okay.
Yeah, and then Japan's market opens at I think 7 Central Time, so 8 Eastern. And so sometimes you'll get a nice reaction at the open of the Japanese market.
So that was definitely a smash and pass then, huh?
It was, yeah, smash and pass. I passed it in 2 days.
Smash, smash, pass, and sleep.
And sleep, exactly. Relax. Trade, and chill. And so that's this account here, this pro account.
Mm-hmm.
And this is my new funded account. I lost my last funded account last Friday.
It's all good. If you can get them back in 2 days, then who cares, right?
Right.
Obviously, you want to, get rid of the habits that cause you to lose them in the first place. But,
right.
You're looking pretty good going into that trading competition.
Thank you. Yeah, you guys. For people who don't know, I will be competing at the BDH at PW's place, and he trades big. He trades very big. So I'm like, all right, I've got to practice trading big within reason. Yeah, I miss trading big size though. It felt really good, like to be in a trade where it's 100 points or $100.
Why'd you stop trading big?
Because I went through that payout drought, right? And so I pulled back and stopped trading so many accounts at once, and then really trying to hone
back.
Yeah, exactly. And trying to work on those actual like individual skills, which I'm trying every day, guys, right? Like it's definitely a process. As much as I want to become a millionaire before lunchtime.
Don't we all?
Exactly. So yeah, it takes time. So that is why I traded smaller, started trading micros, just like trying to build back that confidence. Exactly.
So it's 1 week long, and if you win 25K, right?
Yeah. Yep. 25K.
And it's just you and someone else. So you basically have a 50% chance of winning, right?
Yes. So it's originally it was going to be me against Rena. And then there's a twist because PW posted, what do you guys think? Can they handle the heat? How about their combined P&Ls against mine? So I might be taking on PW himself with Rena.
Oh, wow. I actually kind of like that. That's pretty good.
Yeah. So we'll see. I'll let you guys know. We are looking at the end of September, but it's not solidified yet.
What do you what's the first thing you buy?
Maybe some flowers for my mom.
Okay, there you go.
Yeah. 10 minutes.
That's crazy. That's 25K. That's a lot. You know what I mean? How are you gonna trade it? Are you just gonna? Is he gonna like give you like some accounts or what? How's that gonna work?
Yeah,
You don't
I
know
don't
yet.
know.
Okay.
Yeah, I'll find out. At the very least, it's going to be entertaining.
Mhm.
Absolutely entertaining. And even if if I totally suck, like I will entertain.
Who cares, right?
Yeah,
Especially when you trade that much size and it's only 5 days long. Like one
right.
week, uh, like if you have a bad week, it's like a window view of the house, right? Like you
Yes,
can still have one bad week and then the other 3 weeks you had a good week, good
right.
rest. You had a good rest of the month, so it's kind of like whatever. But the only thing that sucks is people are only going to see that 1 week and go, oh, she lost, she sucks. But
Yeah.
just block them out. You know what I mean? Like
Yep.
just pretend you just doing dishes on a random night and trading Globex and just smack that thing, right?
Smash it, right? Just load it up. Let's go. I agree, Nick. It's like you just got to do you, and if people think you suck, like that's okay. Like we can't control what other people think. I think it's continually working on okay, how do I feel about myself? And
Mhm.
what do I think about my trading journey and standing firm in that? Because like just depending on the week, I did really well in that ninja trading competition, and it just depends on the week. And then sometimes my trading is absolutely horrendous, guys, like wild and erratic. And so that's just it is what it is. And I
I'm
just keep
pulling for you.
working at it.
Y'all type one in the chat if you guys are pulling for Terry. Hopefully she gets that 25K.
Let's go. Thanks, Nick.
I think the biggest thing between now and the date is don't try to go through a payout drought. You want to build the
Yeah.
confidence, like the account you just got. Keep
Yep.
trying to, even if it's small payout, just try to keep stacking. The last thing you want to do is like the week before you blow that account, then you're back on that little psychological um, barrier, you're trying to get over while heading into that. So just
Yeah.
build as much confidence as you can. I like for me, this is like a good analogy here. Like when I go play golf, I get the 30 minutes before, and I just hit like easy putts, 2 3 feet, like 50 of them. Just try to build confidence, right?
Mm.
And then I
Mm-hmm.
go to the first tee, like I've had 50 putts, so I haven't missed at all, right? So that's the thing. Just keep getting as many base hits as you can, and that
Mm-hmm.
way going into it, you have full confidence.
Oh, I love that.
Hmm.
Thanks, Nick. Yeah, so maybe this account I don't touch for the day because it's already up $243, and this would qualify for anything over $100 in the core account, and the 50K counts as a winning day, and I need 5, and then I can request a payout. Yes, thanks, Nick. Barbie, any advice between now and then to get ready?
You gotta, you
Clear
always have
that
to have
throat.
some sort
Clear
of
that throat.
plan and some sort of idea of how you're going to approach it. So I think that's what you need to work on is what approach are you going to take? And, you want to have all that planning done before you get in the heat of the moment. That's the plan your trade and then trade your plan stuff, right?
Mm-hmm. Okay, but what
Yeah.
do
Go
I
ahead.
think maybe part of the plan is like, what do I do if I start erratic trading?
If you
Maybe
start
take
what?
a timeout. Like, what do I do if I start erratic trading? Like maybe take a timeout and then like go get a sip of water or something.
Yeah, maybe like definitely take breaks. And also too, like don't be afraid to like. It's gonna be really hard because you're in a different environment. You're gonna try to do stuff um, like uncharacteristic, right? Like because you're not
Mhm.
used to doing it, and you're gonna be in a probably a loud environment, I guess you could say. And so you definitely want to have your process and stick with it.
Thanks, Nick. Market is going to open in about 5 minutes. NASDAQ is down by 29 points and ES is down by about 4 points. We haven't really have we looked at YM?
I ain't looking at that. Sorry, not doing it.
Well, I mean, we haven't looked at Google either. I mean, we can't look at everything. Do you want to look at YM? I don't really trade YM.
I don't look
Uh,
at YM either. I mean, I can pull it up.
I don't have much to say about it.
I'll pull it up.
Who trades YM? So we know if we got some YM traders.
I
Yeah.
think we have some YM traders.
I mean, honestly, this chart looks. This chart actually looks.
Renee's like, yeah, no one's messing with it.
It actually looks
It's
better
not
than
really quite the
NQ
same.
and ES.
What's that, Nick?
I said this chart actually looks better than NQ and ES. If this is the leader, then we should be seeing something like this happen. But I think you're still going to have, you still have the hourly consolidation that you have here on NQ and ES. So your best bet is probably to wait until this Asia high is taken. Or even if you want to get super aggressive, wait till this one's taken. Maybe at 10 o'clock, if we get strong close above, you can look to, target up to here, and then same for the lows. But I definitely wait until one of the, either this low is ran and close through, or this high.
Thanks, Nick.
Mm-hmm. But yeah, actually, that chart looks way better than NQ and ES on the daily, at least.
Mm-hmm.
Definitely is a lot more one-sided. Let me check here.
Oh, I think Barbie, you're muted again.
Who's going to trade the Dow today?
Type in the chat. Let's see here.
I see the link getting posted for the giveaway. There's only 20,000 of those. So you can get one.
Yo, what's up, Dylan?
And what do y'all think about Nick streaming from the airport?
It's a cafeteria.
Doing the nomadic trader life thing.
Apparently. I'm in a cafeteria.
Is that goals?
Huh? Yeah, bro. I was like, I got a 2-hour layover. I might as well hop on the stream, right?
Yes.
Can't miss
I love that
Featured from the
about trading,
future.
though. You can trade from anywhere and stream from anywhere.
Yeah. Company man. Dedicated. Hashtag married to the game. Yeah, I thought Nick only used private jets. Coming soon. I'm not. Someone was like, "Are you flying to Chicago? Pay tribute to the GOAT." Who's in Chicago? Didn't he retire in Washington? I'm going to an undisclosed location. Oh, we got two minutes to open. Let's see here. I'm gonna show one thing. Another thing too, I recommend. You guys probably all see me do this. Is make sure my chart's on real quick. Especially a day like today where I don't really know what the market's doing. I have this batch of fundeds I'm trading. It's just like half R. Obviously it's 8 accounts in here, but plan is wait till 9:30, take a trade 0.5 R, and gotta be A+ only. Probably gonna add that on here. So just recommend maybe it's just like 6 accounts you guys have. Maybe just batch up 2 and just trade them on a day where you're not really expecting a big move, but if you see something, take it and just take it on one batch, right?
I like how you have it written out,
theory.
Nick. Yeah, I like how you have it written out ahead of time.
I try to write out a lot of things like this right here, do the hard thing. Just small things like that. Just kind of a reminder. Someone said I got liquidated by Terry yesterday, lost my house. So now I need to
That's Jan. Jan, good morning, Jan.
1,000%.
No, I think you're waiting to move into your like $10-20 million house. You're flying there to go look to pick up a new house.
Yeah, I mean we are moving, but it is a process at the moment. But I'm actually going on a little 1-week vacation, so but I'll be back on stream. I'll be streaming from there. All right, 9:30 open. Let's see what happens here.
Market is open.
I wish TradingView, I don't know if you guys, maybe it does. I haven't played around with it. But if you guys use this vertical line, oh, wait, never mind. I am a freaking idiot. Never mind. I'm an idiot. I guess they did add it. I was going to say, if you could add an alert on the time, it's like at 8 p.m., but you can do it right here. So, yeah, wasn't thinking. The last time I used that, they didn't have it. Let's see what happens.
Emma's long is working. Congrats, Emma. Emma said she had jumped in long. Market is pumping. First candle is green. It's looking for those highs.
Yeah, okay. I got 10 minutes to get on this plane. I'm trying to write this quote in 10 minutes. So, okay. See what he wants to do.
I want to see. I want to make sure this 64.50 level gets held. On the ES. Oh, yeah. So far, it likes it. That's the one I'm watching now.
Yeah, we are moving up right now. Like I say, I'd really like to see it close above here at 10 o'clock. The 4-hour candle, yeah, 4-hour candle looks like it's about to expand because we did put in a swing low on the previous one. Same with ES. So I'm anticipating this candle on the hourly, to expand higher. So these highs should be should get ran.
So
Someone's saying NASDAQ needs to chill. I don't know about that. You may not get that.
No, I don't want it to chill at all. I want it to move out of this range.
Oh, Denny's done for the day. Congrats, Denny.
Let's go, Denny.
3-day, what was that? 3-minute workout?
It's not bad.
5, 6, 6 now.
Did everyone apply for the $1 account in the chat? We got 500 people, 600 people watching.
Your chances are pretty good on that one.
Yeah, all right.
Sometimes we're giving away 50, which sounds like a lot at the time.
20,000 is crazy. Like when you really think about it.
Yeah.
Like if we gave away 50 per day. No, how many do we normally give away per day? It's usually 300, right?
Yeah.
So we basically just give away 20,000 divided by 300. We gave away 66 trading days worth of accounts. So that's literally
3 months. 3 months worth of accounts.
Yeah, that's literally a quarter of the trading year in one day. Or 1 week, I guess you could say.
It's mind blowing.
Let's see. Can I borrow $1? Oh God. Bro, if you need $1, bro, you know what I'm about to say. Ask Terry. She's about to get 25K.
Oh, I hope so. Wait and see. Oh, MyFundedFutures said, should I call Luke? Yes. We want Luke. We want Luke.
I'd love to see Luke right now. What are we doing? Oil him. Yeah, we need to oil him. Show.
Who signed up? Do we need a link for that? Sign up to oil Luke? That would be trouble.
Oh, wow. Pigeon said Tom of Sabo must be happy right now. He was in along from London.
Oh, nice.
Hey, Barbie, do you have any oil on your website?
We have some foot lube.
Terry had to mute on that one.
That wasn't me. That was a Trading Ranch thing. But yeah, we do have We do a foot lube lotion. I hear it's pretty nice.
Wait, do you actually?
Yeah, there's
Ain't no
lotion
way.
like foot lube.
I'm about to go on bullbarbie.com just to make sure. I didn't know your subtext was day trading without the BS. I love it. Love it. Let's see. Other treasures. Maybe it's under other treasures. Oh my God, there it is.
Yeah, like it should be up
see
there.
it. Can you share your screen, Nick? I want to see it.
I don't know. This is the first time I've done it.
Let's see if I can get-
Yeah, I think Barbie can pull it up. Yeah, no. Also, I love Barbie's website.
Yeah, he was trying to steal it. I'm also trying to manage something over here. What did we have it under? Other treasures?
Yeah, it's under other treasures.
There we go. It's H Nude's foot and body lotion.
Can you switch the screens?
Oh well. You have to use your imagination.
All right, second candle. Trading within that first green candle. Jamie says the bulls are really in charge.
Yeah, it looks like it's wicking above that high that I have marked off. So that's no good. I don't want to see it do that. I'd like to see it get above it. So that's kind of unfortunate, but maybe we got 23 minutes left in the hour, the 4-hour candle, so maybe we'll get something.
It's kind of filling in the chop mode so far.
Yeah, how do you enter? I think we pinned it in the chat. That's how you enter for the $1 50K account.
If we hadn't, just wait a sec. It'll be reposted. They've been real good about putting that out there.
Oh, Barbie, 69% of chat is long bias today.
Nice.
Nice. These people just looked over at me like, what's going on over there? Let's see. I'm gonna check out the 15-minute now because this hourly count looks pretty. Oof.
Yeah, it's not really. It's not doing what I wanted it to do either.
Well, this is something that people can trade though. Honestly, like if you're like a lower time frame scalper, and just like how I was talking about with gold, like if it's in a range, you can trade that range. Just wait till it breaks it, and then you can look for displacement lower. So like the 1 minute. Well, I don't really see an entry model there either, but it looks better. Actually, it looks better on NQ. So now you can look for maybe these lows since from 815 to get ram. Yeah. If anyone has any questions, drop them in the chat. Yeah, clean short with SMT on the highs, 100%. SMT here from this Asia high, top of the Asia range. So it's SMT here with NQ. So I want to see if we displace lower. New 15-minute candle come in 5 minutes. ICT.
ICT. It's a good chant.
If you want Patrick to give you a hard time, tell him you trade ICT.
Oh my goodness.
You don't want to do that. Actually, don't do that.
Lumi is going on there. We had Lumi on our show.
She's going where? From BDH?
Yeah.
Oh wow. Okay. Well then, yeah, he'll just give her a hard time. Yeah, you can just kind of fly under the radar, not attract a whole lot of attention, just trade. And at the end of the competition, everyone looks up like, "Who's this Terry Trades?" You know?
Yeah.
He didn't really say much, but the P&L was talking. It's not ready for shorts, in my opinion. I don't really think it's ready for anything.
That's the problem. It's just
I'm just throwing something at the wall for some of you guys that trade the lower time frames. Yeah, I mean,
how dare you offer trade ideas, Nick?
Oh God. Remind me of my free
So
Discord
rude.
chat.
Yeah, I know the feeling. I've been there, so I recognize that one.
My trading plan for the day is watching this hourly close. So I want to see what happens there. Doo, doo, doo.
Raphael Trades says longs may still be in play. Market is looking for the high of day. So what's your favorite strategy, Nick? If you could only pick one setup, what's your favorite?
Oh man, honestly, that setup that we had Friday, but I'll kind of go through it. I actually think yesterday was kind of clean too, but the problem was it was. I really love it when like Asia highs or Asia lows go into the New York are like untapped, and let's just go back to yesterday. Actually, so going into yesterday, obviously we're bullish because we had a big move up, right?
Mm-hmm.
And over here, replay mode. So we had these Asia highs here. So that means that previous day high has not been ran, right? And if you're in a bullish market, right, you're anticipating that previous day high to at least get hit, along with Asia. So if I'm bullish going today and I see we're below midnight or below 8:30, below the Asia range, like that means I'm buying in a discount, right? Now you still need to see some sort of like entry function. So that's why you wait till 9:30. That's when you get the volatility injection, or if you have news. So price comes in uh, right here, right? So this is 9:30. Runs this low and also create SMT here. However, yesterday was a Monday with no news, and it was a little ugly. But I would have liked to seen close above with a fair value gap and then retest, and then make a move for these highs. But this is kind of like the A+ setup from here. This is kind of it.
Beautiful.
I just didn't get the lower time frame entry. But that was the only thing. But this is sort of the thing because all this on the left is like low resistance liquidity. There's not a whole lot of gaps in here. That price. So if you get the volatility combined with New York Open or news, you should see price cut through this pretty quickly. It took a while yesterday, 9:30 to 11:30. I think mainly we just didn't have a whole lot of volatility. So that was and another thing too is an added confluence is if you have an SMT or divergence at high or low on the lower time frames. So we had SMT here as well. So that was good. So yes, that's sort of my A+ setup. That's like the one I like to see because if you're in a bearish market and we haven't ran previous day low and you feel really good about us going lower, that should at least be the low hanging fruit, right? So it gives you a lot of room to target. So yeah, but as of right now, I don't. Someone just said chop chop. Let me delete some of these drawings here. Yeah, so we're still not closed above an hourly swing high or anything like that. So we got 15 minutes. Let's see what happens.
And SMT is when you have two touches on price, basically.
No. So SMT mainly is just so there was a low here. Actually, let me take this off. It's basically when price runs a low or high on one index, so it doesn't do it on the other. So it's a divergence basically. But I like to combine them with time because like this could be a divergence with these little like two candles. But if the further away you combine them, like on the hourly chart, for example. So let's check out the hourly chart actually. So I like using them on the hourly. Let me take this off now. Let me go back out to ES and NQ. So if we look at yesterday, right? So this 9 a.m. low right here did not get taken on ES, but it did on NQ. So all these lows here got swept. So price came down into here, swept out all these lows in NQ, and then moved higher. Well, on ES, it didn't. So that's kind of the market tipping its hand to me that there's a divergence and price wants to go higher. And if you combine it with all those other things I talked about, it's good. ICT never made sense to me, but volume profile is OP.
Who said
Yeah,
that?
I mean,
That's volume
folks are different
profile.
folks.
Yes.
Yeah, but Barbie trades ICT. Don't let her fool you guys. I'm
Barbie,
gonna get Chant for one of these days.
if you could only trade one strategy, you're forced to only trade not one strategy, but one setup, what would it be?
Probably my Stampede setup. It doesn't happen every day, but those are the days that pay me massively. And that's a hourly key level paired with an hourly trend line. So when I get those, like I'll get that a couple times a month, and it'll be like 80% of my withdrawal. So
Oh, sweet.
I do like those.
Chat, what's your A+ setup? If you could only trade one for the rest of your life, what would it be?
I'm looking forward to Voltron talking to us about order flow, because it is a superior trading way to look at the market analysis, I guess.
So interesting.
I do find some of those strategies pretty cool. You know what I mean? People who trade, like, it's always fascinating to me that people trade different things, and a lot of times we're in the same trades. You know, I've always found that pretty cool. Go big, go home. Gamble on CPI. Yeah, I never heard of the Stampede strategy. I've heard of the Wrangler, the
You don't
Orb.
watch my videos, man. Gotta get with the program.
I watched the Orb one. It hasn't. I checked it out yesterday. It was on my
the Stampede one. I just put
views.
I just put out the other one last week, I think. So I had not shared that strategy. I was just holding on to that one. That was just going to be mine forever, but I decided to show it. You know what I figured out in putting out these videos? I put out strategies that I use and that I know make money because I use them, or at least I can make money with them. And the comments are like, this doesn't work. I've tried this and tried it. Well, just because you can't do it doesn't mean that other people can do it. So you always have to kind of find strategies that fit your personality too.
Yeah, I agree with that.
My little Stampede setup is a little bit of a slower setup, and so I can see why like intraday traders will get frustrated with it. When I trade it intraday, it will work. I can do it on lower time frames, but it doesn't have the big impact. I don't get the big move out of it. I'm always looking for that big move with it.
Mm-hmm. Yeah. Also, what's the lowest time frame you execute on?
I mean, I have like the 2 or the 3, but that's not my usual. I'm usually executing on the 5 at the lowest. But even if I'm executing on the 5, and I actually include this in the video, how I'll execute an hourly strategy on the 5, that's still okay. We've trailed this one, but that's still what I'm looking at. So NASDAQ is on the orb. I put that trade up here, is trailed. ES is hopefully about to trail. And so we'll see if we can get this one going for a change. This is hopefully the final version 1 of the bot.
Are you anticipating that low to get ran from Asia or no?
This is not anticipating lows or support or resistance. This is just opening range breakout statistics. I was looking for an order flow trade initially, but that fell apart. The order flow trade, I needed ES to hold 64.50 with the buyers coming in. So that one got invalidated. That was the main one.
Yeah, it looks like your TP's at 4.8. The Asia low is at 3.70. So that's pretty good. Looks like you got a lot of room there.
This thing does like famously get taken out at break even a lot, but like I've told chat, like I'm cool getting the break even stop out as long as it keeps my my loss rate, down at 25% or less.
Yeah. And that's the 15-minute you got on right now?
Well, yeah, so this is because it's so clearly defined rules for this trade, I did program that. And that's I saw one of my testers chatting about it too. He's got hopefully the final release.
Raphael Trades caught 50 points on that short and passed some
Let's
pro
go.
accounts.
Love that.
Oh wow. Well, past some pro accounts. Dang.
Dang.
There it goes.
He
Yeah, he
didn't
makes
just
it
say
sound
one.
like
He
he's
said past
going
some.
crazy over there. Yeah, that one. This is what happens when we're in these like choppy climates. Is that break even stop? It just gets hit and hit and hit. So we're waiting on the market to have a reason to move. Like Friday it worked out pretty nicely.
I also feel like when it's range bound, the break evens are like the wins, right?
Yeah,
Like that.
they
You know what I
can
mean?
be, for sure.
Or even like you have to be really nimble with like profit taking. You know what I mean?
Mhm.
So that's pretty good.
Well, and on the
a truck
systematic
rolled
trade,
out.
I'm not. Oops, what's going on here? Man, I'm glad I had the stop there now. That's what it's there for.
Nick looks like the type of guy who puts granola on his hamburger. What in the
Granola and
world?
hamburger?
We need to add that to my ranch
Some of y'all
bot
have-
insults. That's a good one.
That's you have quite the imagination, a big boy.
Oh, man.
Quite the
Good
imagination.
one.
Speaking of, I do have these. No, these are dark chocolate nuts and sea salt. So I thought that was trading the range. It seems, yeah.
My
Should be blocked. Is
retrigger
that lane
retriggered.
fine? Yeah.
So we'll see. But I'm not real super excited about the orb trades on account of the choppy conditions we're in. We'll see.
Mhm.
How did that do back in April? Did that do pretty well? Like when all the Trump tariff news was going on?
Yeah.
Yeah. figured so.
There's some days where it ended up getting stopped out and then didn't have re-entry, but in general, April is good for it. The guy who uses
Strawberry flavored
toothpaste.
goat.
It's
Do you
not
have
very
toothpaste
manly,
on your
though. I
website,
think
Barbara?
that's the point. We do not have any toothpaste. We should get something that goes in your mouth. That would be a good addition. The whole thing with the merch site is like that's all stuff that has come up in Discord. So that's either something that somebody wanted or like an inside joke. The nude lube is definitely, I think he's reordered his nude lube.
Oh, Luke.
You guys, speaking of lube, with oiling Luke up, he is in the house. Let's welcome Luke. Come on down, Luke.
Oh my gosh.
Wait, it was speaking of what?
They were talking about I don't know. I heard the word lube,
You asked for that one, I
and of
guess.
course I thought about oiling Luke up. How are you this
You
morning?
gotta be careful.
Good. Doing great. I'm loving this giveaway that we're doing. I've got a question for the chat. If you do not know about the giveaway that we are running, will you please put a 1 in the chat? I'm trying to understand how wide word has spread. And this is a pretty neat, unique thing that we're doing. If you are not aware of the giveaway that we are doing, will you please put a 1 in the chat? Holy moly, there's a lot of 1s. I thought everybody would have known by now. All right, can we talk about it?
Yes.
Terry, are you aware of the giveaway?
Pardon?
Are you aware of the giveaway?
I am, but I know a lot of people aren't. So yeah, let's talk about it.
All right. Can we get just the 4 of us on the screen? We need to get. I got to make sure my hair looks good. You know, this is a big deal. All right. For the first time ever in prop trading history, MyFundedFutures is giving away 20,000 accounts. 20,000 unique users are going home with a free 50K core account. There is no gimmick here. There are no strings attached. You will be charged $1 all in, no activation fees, no ancillary fees, no upselling, no throttling on payouts. This is a full 50K core account. You can request up to $5,000 for just $1. It's as simple as that. 20,000 of you are going to be going home with that account. How does that sound?
Amazing. Lots
Amazing?
of winning.
Come on, give me
Pretty
Yes,
one.
dope.
absolutely amazing. This has never been done before. 20,000 accounts. It's so many. It's like half a stadium, a professional football stadium.
Right? That's pretty cool. All right. Let's talk about this a little bit more. And if you have questions in the chat, drop them in there. We are the people. We are the ones that are here for you. So we want to see them. But I'm getting a lot of questions as to why is MyFundedFutures doing this? Users are saying, Luke, MyFundedFutures, why are you giving away 20,000 accounts? The answer is simple. We preach about the experience of trading with a reputable firm, trading with a firm that's built automation into processes, trading with firms that do not deny payouts, trading with firms that have instant payout approvals for users, rules set up for you. We know that a lot of users chase price and neglect the experience of trading with a firm that has a long track record. And we believe the community deserves to understand what that experience is like. We're confident that once you start trading with MyFundedFutures, you're going to be hooked. You're going to get it. You're going to understand the difference. And so for that reason, that's why we're giving 20,000 people free accounts. It's as simple as that.
I did the math
MyFundedFutures.
earlier. That's 66 days worth, 66 trading days worth of account giveaways all in 1 week. You know.
Yes.
MyFundedFutures is the best.
We're the
Okay?
best.
We're the best. Absolute best. Winning.
You may want to
Icarus
dismiss the
said you're
poll
insane.
so people can and pin the link so people can sign up.
The link is MFFU.com/billion. It's that link because 20,000
There you go.
accounts at a $50,000 accounts is $1 billion. So that's literally $1 billion to give away. I like just being colloquial with you for a second. Users are seeing the 1 billion number and they don't believe it. Like they think that there's some catch to it or that there's something there. No, it's really as simple as that. So I guess a final point to address is MyFundedFutures is giving 20,000 users a 50K account for $1, all in, no fees. Everybody's saying, what is the gimmick? What is the catch? Are these demo accounts? A lot of traders in this industry are used to gimmicks. They're used to the switcheroo. They're used to firms not following through on their word, getting their payouts denied. We've built this track record of trust and transparency. And so when we say 20,000 of you have a shot to win this account, 20,000 of you seriously have a shot to do it. There's no reason not to give it a try. It is the cheapest path to funding that you can imagine. You can request up to $5,000 of payouts off this $1 account. There are no rule changes. Again, we're serious. We want you to experience the what happens when you trade with a trustworthy, transparent firm, a firm that's built with the go slowly, so that way you can make sure you're doing things that are battle tested and right for users. And we know that you're going to love us once you give it a try.
I have one question, Luke. Is this something you thought of on your honeymoon?
I would say it's something that the team thought of on my honeymoon, and then I had to go execute while I was on my honeymoon. How about
that? Okay. I feel you. Well, I got a flight to catch. So I'm gonna have to start boarding here, but that's pretty cool. So when does that expire? You had until Sunday to sign up.
You have until Sunday.
All right, cool. I'm gonna head out. I'll see you guys tomorrow.
All righty, my friend. I'll see you tomorrow. Can I stick
Take it
around
easy, guys.
for 2 more minutes, Terry and Barbie?
Yes.
Good with me. Let's do it.
All right. So I want to ask the chat.
Oh, wait, we need Luke back.
I'm here. Woo!
Should we
All
put,
right.
can we put Luke in the middle? I feel like I want to see your beautiful.
Terry, that was very sweet of you.
Yeah.
All right, chat. If you still have not registered, will you please put a 1 in the chat? I want to see it. Is anybody not registered? And then I want to know, why have you not registered for a free account? This is something that the whole world should be shouting from the rooftops. It's the biggest giveaway. I would say the biggest event in prop of all time.
Ever. It's amazing.
Yeah. All right. Okay. All right. So I see some feedback. People are saying they don't have $1.
You got $1.
Send you the $1. Send me if anybody in the chat needs the $1 for the account, my Venmo is at Luke Jacoby, I think. Send me the Venmo request. I will send you the $1. And then you've got to post proof of it on socials for me. That's our trade.
Unheard of. Luke, you've got everyone's back.
All right. So to recap, MyFundedFutures is bringing you the biggest event in prop giveaways. There are no catches. There are no gimmicks. A full 50K core account for just $1. 20,000 of you are going home with that account. $1 all in, no fees. Again, we're getting crazy response, crazy social sharing, crazy questions from users of how are you guys possibly able to do it? We can do it because we've built a firm with a track record and a trajectory that doesn't force us to chase price, doesn't force us to do gimmicks, doesn't force us to change rules. We've built a firm alongside you all for the past several years, and now we're in the position where we can do a big celebration like this. So again, 20,000 of you can get a 50K account for just $1. You can request up to $5,000 of payouts on that account. All that I ask is that once you register, share on your social that you registered. This is a big giving back to the community moment for us. We want to celebrate it. We want to celebrate you all. The link is mffu.com/billion. That's Mike Foxtrot ukulele.com/billion. And if you need the $1, send me the Venmo.
Let's go. Chat, type in W for Luke and for MyFundedFutures. Absolutely the best.
Woo. All right, Barbie, give us some words of wisdom on this one.
On the giveaway?
Yeah.
You know what I've noticed is you have to, we get kind of attached to some of these accounts sometimes. And so you're like, oh, this is the account that I got there. This is the account that I got then. I swear, at least in my community, when people end up earning these free accounts, they have the best luck with them. And so they end up, I think they value these free accounts more because it's exciting. Because like, hey, they gave this one to me. These end up being the luckiest accounts, the ones that end up getting given away. So I hope that whoever the lucky 20,000 are, that you do a great job and have the best of luck with your free account, because I think it's going to be the best luck.
That's it. 10 seconds, no gimmicks, $1 all in. 20,000 of you are getting a 50K account, up to 5,000 requests, and that's all we got to say. Simple as that.
Thanks for joining us, Luke. We love it when you come. It's always exciting. Things are always being cooked by you. This is exciting. 20K, guys.
Woo. All right, Terry, Barbie, thanks for letting me interrupt.
Anytime. Have a great day, Luke. Thanks for stopping by. Let's welcome Veltron from our chat to the show. Hey, Voltron.
Welcome.
Hey.
Hey. Oh my God, it's so fun to put a face to the name.
Yes, I'm trying to put up my screen because you'll have to see my screen for what I'm going to be talking about. Okay, let me put that up real.
Yeah, I'm excited about this. We've had a lot of ICT traders, and I know, no shade to ICT. There are some really great strategies out there with order flow.
Yes. Let me. Did that work? Am I sharing my screen?
Okay, let me,
Actually,
let's see.
I don't see the back end. We'll give them a second.
There it is. Yeah.
Oh,
Okay.
Awesome.
there it is.
All right. All right. Well, thank you for having me on the show. I really appreciate that. I feel
Thanks.
honored and special.
Thanks
to
for
be-
coming on.
Of course, to be on the best prop firm show for sure. I just got a message on another firm I know that I trade on, and it's so I can't wait to get rid of them completely. But I have a lot of accounts, a lot of the funded accounts, and just to go 100% with you guys, because it's so nerve-wracking every time you get a payout. Am I going to get it? Am I not? Am I going to get flagged? So this is honestly like the best, hands down, for sure.
Right? Like the fastest payouts. It's just like automatic. It was 12 minutes from the moment I hit request to the moment it was in my bank account. Like,
Awesome. That's beautiful.
yeah,
Definitely
right?
1 week for sure. So
Yeah, I know
Is
what
that
you're talking about. Yeah, it sucks trading with that
Yeah.
firm.
Is that a footprint chart that you have for us?
Yes. So let me explain. I'm sorry.
Love footprint charts.
Okay. So what I have right here is NQ on my left side. And then I have ES on my right side. And I have all the different time frames here. So I can toggle along 1 minute, 5 minute, 15 on each one. I like to look at both of them simultaneously. So let me just explain a little bit what footprint is, because I know a lot of you are ICT traders. And I trade no concepts of ICT. It's strictly order flow. Okay. I use the footprint charts. I use the volume profile, and the level 2, which is the real liquidity. Okay. Not just any made up liquidity, like there's a certain pattern, so there's a liquidity there. No, this is actually level 2, where it shows you where the resting orders are at. Most of you would refer that to Bookmap. And I just have it on my Quantower AMP charts. But let me explain what footprint is. So footprint is only the aggressors. So it's the market orders that everyone executes on. So this chart here, which you see I have this right now on a 15-minute time frame. So each one of these rotations is all the orders that got executed, whether it was a market sell or a market buy. It's going to have 2 columns here. And I'm sorry too, I know we were trying to get this clear, but I have a big 49-inch in front of me, the curve. And I guess it just doesn't come clear on your end, but I'm going to try to explain it as best as I can. So you have a split section down the middle of each one of these rotations, okay? The one on the right is the seller's aggressive. The one on the left is the buyer's aggressive. I'm sorry, vice versa. It's buyers on the right, sellers on the left. And so what that means is basically it reads diagonal. So if there's 10 sellers that execute on the market level, it's going to print it on there on the column, and you'll be able to see all that. Well, why is that important? That's a good question that you asked. Well, it's important because the big institutions, the banks, the hedge funds, the big boys and girls actually use these prints to move the market, because this is the only thing that moves the market is the market orders. You can't move it going up or down without a market order actually being executed. So why is that important? Because the market gives us clues on what they're actually doing. So if we can just follow behind them and just pick up the crumbs, because that's all we need, and we can make a lot of money as long as we know what side we're on. So let me give you an example, okay? So this morning at this area here, this was yesterday. This area right here on the 15-minute time frame, yesterday around 21:45, so 9:45, okay, in the afternoon. So this area right here, what you see, these green things, these are imbalances, okay? And what those imbalances means, it's not a fair value gap. No, that's I'm sorry, that's nonsense. It's not fair. It's an imbalance is basically meaning like there's aggressive orders there, and the sellers couldn't catch up with them, so it moved out of that area. And now we have a number to display what those aggressive people are doing. So what can you do with that? So you can wait for price to come back for a retouch and then enter. as long as you know what to do when you're getting to that time frame or actually in that specific spot. And so if you know to do that, if you can look at this area here, this price level is 23,422. Okay. If you look at this price level, it's rejected off of this every single time. Look at this rejection, back up, rejection. And if you can see this 418 or 422 level, this has went up all the way to 529, or even in this section right here, you don't need to catch a lot of the move. You just need a small piece. For me, how I trade, you're probably going to think it's pretty small, but it's a 10-point stop for every single one of my trades and a 30-point take profit. So 3R risk every single time, no matter what. The reason I can get so precise, and this is an NQ, by the way, not ES, this is NQ. The reason I can get so precise is because I'm looking at the footprint charts and it's telling me, the institutions are telling me that they want the price to come up from this level here, because this is the imbalance that it got rejected from many times. So it's almost like cheating. If you can figure this out and follow the prints and know what the market's doing, then you can definitely get some good returns for sure. Okay. Now there's other things that I look at too. Of course, when I enter, there's this right here on the right side. This is not volume. This is actually level 2. So these are all the passive orders right now that are getting set on the market. So what I like to do, I got it color coded. So when it gets to a different color, it shows me that there's liquidity there. So I'm going to chase it to that level possibly, or basically to the next imbalance. So that's part of footprint. I know that's quick. I know you probably have some questions, but this is how real institutional traders trade. So if they're trading with these tools, why not use it and learn it? It's all about having an edge, right? So that's
this is more about the why. If you have an imbalance that you're going to call a fair value gap or whatever you're going to call it, the order flow is showing you what's actually going on, like kind of the why and what's driving that imbalance.
Exactly.
Which is why
Barbie,
it's
that's
superior.
exactly.
I'm just going to point that out real quick.
Absolutely. You're spot on, because you have a lot of people say, no,
I love
that's not
order
why
flow.
It moved up. It moved up because there's a fair value gap there, or an order block, breaker block, propulsion block. And trust me, I know ICT concepts. I traded them for 2 years. I studied it for 1 year and I traded them, and I was just, I got lost. And so, yes, so it moved up. Why? Not because there was a fair value gap, because there was an imbalance here where the institutions moved the price up. And that's why you get in, not because of any other reason. And even some of my students, some of them were strictly ICT. And even I think some of them don't even use candlesticks anymore. They use this only. They've changed it completely because they know that this is what drives the market. And so this is what we're going to follow. I can't obviously explain this in the time that I have because I also look at other things too. Volume.
Well, yeah, you're introducing us to the concept though, which I love.
Exactly. And if you could just study this and you can just see how it bounces on these levels, it's just amazing. Even right here, look where it rejected off the sellers that were or the buyers that were trapped up here. Look where it went. It went to this area and got rejected and said, probably where's it going? Here, check it out. A bounce back up to where probably right here with some absorption. So you got to know how to read absorption too on the smaller time frame. And that's what I do. I hone in on my entries. And that's why I can have a 10-point stop on NQ. That's plenty for me. That's actually a lot, a 10-point stop to make 30 points. All my trades, I do one mini on each trade, and that's it. I don't do any, sometimes I'll scale in, but one mini is the minimum. I don't do micros. So one trade I'm in and out and I'm done for the day, and times that by 10, 15, 20 accounts. It's quite a bit of money. That's awesome.
10-point NASDAQ stop.
Oh yeah, exactly. It used to be 6, Barbie, but I changed it after tariffs because
you had to give us a little bit with this wider range, huh?
Yeah, exactly. I did because I was getting ripped out. I'm not going to lie. I was like, wow, even with the prints, because it was just so wicky, and no one ever traded that kind of volatility. And awesome. I've been trading also since 2017. So I've been trading for a while. Footprint, I've been trading a solid 5 years. And I just stuck with it. And I'll never go back. There's no way I can't. And all my students will tell you that. They're like, it
is like your whole mind opens up when you stop seeing, things with weird names on the chart that some knucklehead taught you, and then you actually learn to understand the mechanics of the market. It's like taking your beer goggles off and actually seeing what's going on. It really does make trading a lot easier.
That's, you know what, that you brought up a very good point. So it's like going into the doctor, right? And if you're trading just with the candlesticks, if you're going into the doctor and you're telling him to guess, hey, where does it hurt? Well, he's not going to know, right? If he's going to guess. But what if you had an X-ray machine to look inside that candle, or an X-ray machine to look inside that body to see where the pain's at? You can precisely pinpoint where it's at because it's showing you where the fracture's at. Same thing with the footprint charts. You can see where the aggressors are executing on a certain level to the right, so you can make your analysis and sniper entry it. That's perfect. Yeah, it's well said how you said that.
Voltron,
I use footprint charts on NinjaTrader. I know that's not the only place that you can get it. Did you say you're using this on Quant?
Yes, this is AMP futures. I got a specific ratio. So when these things align here, I don't draw these imbalances. They're automatically drawn out for me when the imbalance happens. As when this price level leaves, it's going to draw it out for me automatically because of my settings that I have down here. There's a certain setting that I like when it comes to ES and a certain setting that I like when it comes to NQ. So I have those set, and then I just wait. But yeah, AMP is what I use. I love that. It's a live account. I love that account. I don't trade live on it. I just use the firms. But this is what I've stuck to for the my experience with footprint charts. I don't have any experience when it comes to TradingView and all the other ones here at charts. I know there's some other ones out there, but it's just hard for me to leave this when I've been in it for so long.
Voltron, people are asking how they can learn more about this. I heard you say you have students.
Yes, so I do have students, but I don't just invite anybody. It's very select, and it's not really advertised as in, hey, come on in and you're going to be, accepted. I have a small community, and it's not just, traders. We're personal with each other. We help each other out with even life's things. And so I would say the best way to learn it would be just YouTube it. You can get it for free. There's plenty of people out there that have worked for institutions that give free YouTube videos out there, and you could just learn it from there. That's when I started doing that 6 years ago, and just grasped. I just got it. I got it after a couple of years. I was just studying the charts every night, looking at why does this move, why doesn't move, what's going on here, and then just looking at the mid deltas, the deltas down there on the bottom, which I do use deltas too, Barbie. I know you say you do.
I like the deltas a lot. Just for screen real estate, I keep that on my charts when I can't have footprint open.
Yeah, it's down here actually at the bottom. If you look at the bottom down here, it's my time statistic table. It shows my delta, my max delta, my mid delta, and my volume all right here. So there's a formula I use here when it comes to absorption. So if I see the deltas are really high and the buyers are in control, that will tell me something, especially when I'm trying to enter a trade, to know like, hey, I'm in the right side of this. So I'm going to go ahead and go for it because I see the absorption. I see the sellers fighting, but they can't pull through. And I see the buyers taking control. So I'm going to execute. So that's an art to itself. And it's just studying it. There's no course I took. If anyone is asking, I was self-taught. So I just learned this on my own.
Well, part of it's like you're understanding the logic. And once you understand the logic, that's when you can kind of come up with your own formulas for interpreting what's happening into a trade and executing it.
Absolutely.
There are a lot of different ways that you can interpret the volume like that. And there's a lot of different ways I've seen traders use the footprint charts too. I like using it to find key levels more than straight up entries.
Yeah.
So that's why I like glance at it, and then I'm back on my candlestick charts. I kind of go back and forth like that.
Yeah.
But you're straight off of these, aren't you?
Oh yeah, exactly. Now I do have TradingView up on my right screen here, and I am looking at the formations because there's another strategy I do have that I'm looking at technicals when it comes to a certain pattern that I've actually seen throughout the years of my trading. So I am looking at that, but also I'm looking at volume profile here on my charts. I am looking for the previous day's point of controls, looking at the volume area highs and lows. for support and resistance to now, now I use that, and then I look at the footprint, and now it makes sense, because let's say this is a high volume node in this area, right, on the trading view. Then I'm looking at this and I'm like, oh, well, this is probably going to reject, but I'm going to wait on the 1 minute chart to see if there's any kind of absorption and see if the sellers take over. So I look at that and I'm like, all right, I'm going to execute, because I do see it here on the charts on my mid deltas. And then now I'm confirming with the liquidity here. This is liquidity. This is not the volume. This is liquidity. So I'm confirming that there's like a big order down here resting like 1,000, and then I'm going to execute. So that's, all the confluences. When you add them all together, it's like you're unstoppable. I mean, I really do believe this has changed my whole trading around. Nothing else has. Nothing made sense but this for me. And I know most people, they're like looking at this, because I tell them, I go in chat rooms sometimes like, hey, this is key. And they just brush it off. And they're just like, because it's hard for them. It's hard to learn, and it just takes time. But just like with anything else, ICT, I took a whole year of learning it and studying it. So do the same. Do 4 or 5 months of this, and it's going to change. It's going to change your whole trading on how you see it.
So amazing, Voltron. Tell us more about your trading journey, how it got started.
Oh, so back in 17, there was a lot of groups I was in. I started with, low float stocks, the small caps. They were just the breakout trades, the halts in the market, all that stuff where you have a scanner on the side and you're looking for those. It was tough. It was really, really, really tough. And I wasn't profitable. It was just, I'd win a little bit, lose, win and lose. And I was like, I got to do something else. So then I went to the blue chips, the big boys, right? Traded them for a while, but I just didn't have an edge. And then I did that for probably a year. And then I moved on over. I said, I need to do something else, and found another group, and I was doing some other things with them. And that just didn't work long-term. Then I went to options. I did that for a while back in, I think, 2020 or 21. It just wasn't, I did okay, but it wasn't what I wanted. I moved over to, what was it at that point? ICT for a little bit then with another group. And at that point, I was already learning order flow. It's just the group wanted to go a different area. So I just went with them because it was cool having a group. It is lonely trading. That's it. You guys understand that probably.
Yes.
And so I was like, all right, cool, let's do it. And I just, after that, it was just like, you know what? I think I'm just going to switch to the futures market and stick with the prints, and then just eliminate the noise and then move forward. And that's what I did.
Oh, your story is so inspiring. You kept trying different things to see if it fit, and you didn't give up. And then you finally found the thing that clicked and that fits you.
Yes. And I think this is, just like I said before, this is what the institutions use. This is what professionals use.
That's why I wanted to use it too. I was always I want to trade with the big boys, where the big boys using.
Yes, that's my whole point. That exactly is right. Why not?
I don't really care what the internet small boys are doing.
Yeah, exactly. And then once you start seeing this, it's like, what's going on here? It's all foreign. And I get it. I do get it. But just take a little time to dive deep into this, and then
Everything's foreign when you first come to it. So
yeah, it is. It super is. But it's super exciting too, because once you master this and you know it, it's like you don't need to rely on anything, or you don't need to be, oh, well, there's a chicken noodle soup here with a Lego pattern going up here. So this is definitely going to work on SMT, this going this way, fair value gap with the propulsion block. Of course that's going to work. Look, it's none of that. This is what's in front of you. This is the flow. This is what the market's doing. This is the market executions. Let's just follow the prints, get the clues, and execute. Simple as that.
It's the real underlying the market. It's like what's actually happening.
Yeah.
Yeah, it's not about all the abbreviations that you can sell to the internet.
Exactly. Exactly. Terry, I wish you met me a while ago. We would have won that competition. You gave me a month with you, and it would have been game over.
Oh, dang it. Well, there's always future competitions.
There you go. Absolutely.
If people want to get in touch with you, Voltron, are you on any social medias?
I am not, actually. I'm pretty private. I do have a Facebook, Instagram, and all that, but I don't go on there to advertise, like, come join my group or anything like that. I don't.
You don't want to sell us any FEGs?
What's that?
You don't want to sell us any FEGs?
No, ma'am. No, none of that. No.
All right.
No FEGs.
We'll just enjoy you in chat then.
Yeah, absolutely. Absolutely.
Such a treat. We're so lucky that you're part of our community.
Absolutely. I love you guys. I mean, really, I do. I just can't wait. I don't want to say I want to blow these accounts so I can move on over to you guys, but I just, I want to keep getting all my payouts and then
just keep adding them. Just keep adding more accounts.
Well, yeah, I just don't want to be with them anymore. Let's put it to you that way. Once those are done, they're done. I'm just going to go all in with you guys. So,
I'm trading mine side by side.
What's that?
I'm trading mine side by side. It's working. That's how I'm transitioning.
There you go. There you go.
Yeah.
I love it.
It's not a good feeling to wonder, am I going to get paid? Like, even though you built up that.
It's not.
Yeah, those profits.
Yeah, and it's not because they flagged me too. There's a company that flagged me just because I was getting payouts left and right this whole week, and they just flagged me and said you're under review. I'm like, okay, that's fine. They want me to, I think, send them some proof.
Fine, you can't have my trades.
Yeah, they want to. Yeah,
that's the way I look at it.
Oh my gosh,
you're not worthy. You don't get my trades anyway.
Exactly. So I'll videotape myself. It doesn't matter. They'll see what I'm doing, and it's.
The smart props are just going to copy your trades instead of complaining about paying you out.
Exactly. Awesome.
Oh, what's your favorite part of trading with MyFundedFutures besides like the reliability and trustworthiness? Because we know that we will get paid by them. Yeah.
Well, that's my. I mean, you said it right there. It's just fun being around with you guys. You got you got energy, and I just love that. Sometimes in my group, we don't all trade together every day. So then I'm just like, well, let me just log on with my peeps, and then we can trade together and see what they're doing. I know most of the time it's kind of like they're talking ICT, and I get it, but I'm doing my thing too, and it's just fun listening to y'all. And I like to watch Bull Barbie. She's like, whenever they're like, hey, fair value gap and ICT, I see the
here we go.
I see
I want to talk about what you're talking about, and I'm stuck talking about freaking fair value gaps.
Yep. I get it. But I'm reading you. I got you.
All right.
Someone asked, what's your biggest payout? I think people want to live through you, Voltron.
Well, they're individual payouts. So the biggest one was actually a long time ago before even order flow. It was over 10 grand. That's the biggest in a single time, which was not a payout. It was actually a live account.
Holy
that
smokes.
was better. Yeah, that was crazy. That was the low cap stocks, trading on Ameritrade on TOS. But with the firms, it's just 25 or 15,000. So they all add up. I mean, this week alone, I'm at 16K. So.
Oh my God, I have to come study with you.
And I can, my group knows. I mean, they're probably watching me, and I posted all on the channel. They know it's all, It was 13 when I posted, so I made another 3 yesterday or the day before. So. Today I haven't put a trade on yet because I'm with you guys, but it's fine. I can trade after. I like to be in the zone.
Right, and not feel distracted and just be present with us today.
Correct. Yeah. Correct.
People are saying you are the best.
I try. I wouldn't say I'm the best. I'm still learning. I mean, I'm open to other things too. Not to leave this, but I'm always open to what people are saying and how they're trading. It's kind of amazing to see that, like, they're trading this and their concepts, and I'm like, cool, all right. Let me see what I see on the charts and see how that correlates.
Yeah.
And there's only 2 pairs I'm looking at, so it's only NQ and ES. There's nothing else that I look at when it comes to VIX or nothing else. Just I have these 2 charts up, and that's it.
Chat, drop any questions you have for Voltron. So how do you decide if you're going to trade ES versus NQ?
Good point. So I didn't really explain this much earlier. So ES is king, of course. I mean, and for the most part, NQ is going to follow. So all my analysis is on ES. So if I see ES getting rejected on this, for instance, then NQ is going to probably have the same imbalance somewhere, which is down here. So if it gets starting to get rejected, then I'm going to go ahead and enter on NQ. So I go off of what ES is doing and I piggyback with NQ. That's, I never, well, I wouldn't say never. I hardly ever put an ES trade on. It's just the analysis because I like the way it moves and it respects these very well. As you can see, these imbalances here for the touch, retouch, and back up. And then it's having some issues right here. So knowing this, how it's going to, knowing that's going to react well to these imbalances, this is a buyer's imbalance. So buyer's in control. And 1 hour later, it rejected and moved back up. So knowing the fact that it does that a lot of the times, I mean, this is pretty precise on the ratio that I have with my settings. You can just look on NQ and follow that and execute.
Someone asked your favorite time frame.
I execute on the 1 minute chart because I start reading absorption once it gets into here. So in this area, I go down to the 1 minute chart and I start seeing like buyers are trapped here in this area and it's rejecting. So I start reading all this and then start executing and then find my level 2, which is down here. There's almost 500 orders sitting at 6440. So maybe a possible pullback to that area. And right now it is rejecting the previous day point of control. I think I have that right. I'm not sure if I did my analysis right this morning. I was kind of in a rush, but yes. So 1 minute execution, looking for my imbalances on the 5 minutes and 15 minutes time frame.
So interesting. People are asking if you have a Discord, but you don't have a Discord, right?
I do have a Discord. It's the private one. It's a private Discord to have. It's not. It's only for the people that actually have paid. I do have, like I said, I do have a course. I open it up when I feel like it. It's not my last course was 6 months ago, I think, or 5. And
Maybe like invite only.
Yeah, it is. I mean, I have a
rush in
website.
looking
It's
for
called Voltron Trades. That's my website. And then you could email me if you wanted to join. But like I said, I'm not taking anybody. Probably not for a while. Probably maybe not till next year or something. I just don't want to. I'm not in the mood to train right now, and teach. But when I'll get there. I'll get there eventually again. It just takes a lot out of you whenever you're doing that.
Yeah.
You have to learn to balance teaching and then your own learning, and it is a lot.
Exactly. So, yeah.
Voltron Trades, your name, and then just trades.com.
Yes, VoltronTrades.com. The website will pull up.
You might have to start a waiting list after this.
Yeah.
Yeah, maybe next year, somewhere on there,
Yeah, I appreciate that though, that you're like, oh, it does take a lot, and so I'm just going to hold off, and because the demand can be very great, and instead of just like being like, okay, yeah, 1,000 of you guys, I will teach you all, and not do the best job that you feel like you can do. Like, it says a lot about your integrity.
Yeah. Well, and that's one thing I learned. I was in the service I served in the Air Force for 20 years. So that's one of the core values that we have is integrity, So I retired back in 2017. That's where my trading journey started.
Oh my gosh. Thank you for your service, Voltron.
Oh, thanks for your support.
Last minute thoughts before we take off for the day?
With the chat or me?
Voltron and Barbie.
What are you kind of looking at for the rest of the day? What kind of order flow setups are you maybe looking for?
So the setups I'm looking for it's just looking at imbalances. So let's see, like for instance, these areas here, I would have traded already for the rejection, and this area here for the rejection, and would have made solid money already. For the rest, I don't trade in the afternoon. I just cut it short. I do morning only, and when I get my 1 trade or 2 trades, I'm done. So I don't really analyze after, but I could real quick if you wanted me to, and see what I see. I would look at this area right here. This seller's imbalance is pretty big. It's almost a triple digit. That's where it's having trouble. And then this area here, we have a lot of buyers that are trapped here at this top, and we do have level 2 right here. So what I would do is wait for it to pass this area here. If it goes through, then looking for a long into this area here to cover the 210 orders that are sitting there resting, and then for a rejection here. That's just a short analysis on the 15-minute time frame. But once again, a lot of people do ask me, hey, do you just trade the imbalances and you just hit buy or sell there? No, there's more to it than that. Don't take that the wrong way where I'm saying these imbalances work all the time and then just enter there. No, you have to really go and look at the context of everything, right? You have to look at where the market's at. You have to look at level 2. So
Thank you, Voltron.
of course.
Thank you so much for joining us today. Oh my gosh, this is such a treat. I hope you come back.
Yeah, just let me know. I'll be ready and available if you need me to come back.
Barbie,
Awesome.
what are your thoughts today? Or last minute thoughts that you're going to leave us with?
I am still kind of seeing that same thing I talked about pre-market, where we're either going to be choppy or drift, kind of walk up. We're kind of doing the walk up thing right now. We're getting towards potentially some resistance, so we'll see. Not expecting a big day today, but I'll see if I can find anything to work with for the group. So
Awesome.
All right, that's a wrap, guys. Thanks for joining us. We can't wait to see you in the morning. And Ash is on next. Thanks,
Awesome.
chat.
Thank you. Y'all take care.
You too, Voltron.
Hey, good morning, everyone. Good morning or good day, depending on where you're from. Welcome back to another segment with myself, Ash Trades. How's everybody doing today? How's everybody's day going so far? How's everybody's week going so far? Let's get a bunch of W's in chat for Voltron. Thank you, Voltron, for spending some time with us. Some highly valuable information. So I really appreciate your time and your ability to share your journey with us and your information with us. So thank you very much. Let's take a look who we have here today. Just going to take a moment, say good morning to the community, and then we'll get into some information here. Good morning, No Eskew. Good morning, Saju. Good morning, MM. Good morning, Marcelo. Good morning, Jenny. Good morning, Kevin. Good morning, Content Hunter. Good morning, Peter. Good morning, CJ. Good morning, AD. Good morning, Rocky Mountain Trader. Good morning, BD. Good morning, Mike. Good morning, Rod. Good morning, Alicia. Raphael Trades, what's up? Chris, what's up? Mr. Chippy, what's up? Hello, hello, hello. Good morning, Gustavo. Good morning, Brian. Good morning, Abhishek. Hello, hello, hello. I hope everybody's week is going well. Hope everybody's day is going well. Good morning, Rodrigo. Good morning, John. Good morning, Pigeon. Hello, hello, hello. Raymond, what's up? Francis, what's up? Edna, good morning. MyFundedFutures, good morning. Mr. Delusional, good morning. Levi, good morning. Talk, good morning. Hope everybody's day is going well. Hope everybody's week is going well. Let's see how everybody's doing so far. Throw a 1 in the chat if you're green on the week. Throw a 2 in the chat if you're red on the week. And throw a 3 in the chat if you've yet to trade so far this week. We'll hop into some information here after this last question. Oh, a bunch of 1s to start so far. Very good job, chat. Very good job. Bunch of 1s to start. Very good job. Couple 2s in there too. Couple 2s in there. That's okay. Very good job. Well, first things first, I have a different type of giveaway that I wanted to show everybody. So let's hop over there before we get into some price action. I currently have a giveaway going on my Twitter. I'm looking to see if we can reach 200 retweets and 400 likes. If we do that, I'm going to be giving away a monitor. So I have a Dell monitor here. It's a 24-inch monitor. I quite literally have never used it. No exaggeration. The tape on the box is still the original tape that's on the box. So if we get this to 200 retweets, 400 likes, somebody's going to get a completely free monitor. Brand new. You can set it up on your desk. You can have a new monitor, an additional monitor, completely free. I would gladly send it over to you. Hopefully it's from the US because then the shipping will be cheaper, but we'll see what happens. So go ahead and retweet that, like that, if you want to get a new monitor. Once we get this to 200 retweets and 400 likes, I will do the giveaway for this brand new monitor. Next, we'll hop into some of the information so that we can understand what we're looking at for today. All right. I'm going to start with the economic calendar because I find it pretty important for this week. Our high impact news drivers on the week are at the end of the week here. So Monday, Tuesday, Wednesday, seeing that there's no volatility injection, seeing that there's no, driver for price action, I'm being more patient and selective to start the week. Okay. And you can kind of see that here in New York Open. Okay. It was a very slow, lethargic, choppy open. Right? Like if we get down to some of these lower time frames, take a look at this. I mean, we were just chopping away in the opening range all the way until about 10:30 here. And even at 10:30, we're now going back inside the opening range. Okay, so first things first is understanding the news drivers, understanding when the red folders are going to occur, seeing that the red folders are at the end of the week. I really have lower expectations right now. Okay, I don't think that NQ is going to go, running 100 points higher, running 100 points lower, simply because there's no red folders here. Okay. For this reason, I'm going to have lower expectations today. We can still complete our analysis. We can still go through our segment. So let's do that. I'm just pointing to the economic calendar because you have to understand, higher probability versus lower probability. We quite literally need the volatility for our P&L to fluctuate. So I would rather be participating on days that do have red folders. No, that does not mean I don't participate on days that don't have red folders. What that means is I'm just more patient and selective during days like today. Okay, so you can still participate on any given day. Just know the difference in volatility is what I'm trying to say. Okay, so let's get a top-down analysis done. That way you can understand what I'm looking for within price action. I'm out on a daily chart here. On the daily chart, it's very clear that price just tapped into a bullish FEG. For this reason, I have a bullish bias. For this reason, I will be looking for a move to the swing high. Okay, so I'm bullish, and this is the move that I'm looking for. A move from this area above the highs. Okay. Same thing here on NQ. NQ is the correlated pair, right? NQ also just tapped into a bullish FEG on the daily chart. Therefore, I'm also bullish on NQ to move to the swing high here. Okay. Then heading into New York Open, right? After obtaining a bias. After obtaining a bias, that is when we look for SMT that supports that bias. That's when we look for a change in the state of delivery. And you can see that here. Okay, so take a look at the lows, right? Since I'm bullish, I'm looking for a bullish crack in correlation. You can see here at the lows, NQ went and took out the 815 swing low. ES did not take out the 815 swing low. Right? So that's bullish SMT. So we have a crack in correlation. For that reason, I would then look for a change in the state of delivery, and you can see it here, right? A trend change. Therefore, I'm looking for higher prices that look like this. All right, from this area here, moving higher. So this is what we'll watch for today. You got your top-down analysis so that you can see the logic that's being provided to the decision-making. You just have to understand to have lower expectations because of this here. Okay, so that's what I'll be looking for. If you have any questions about that, we'll go over some questions first, and then we'll head into our second topic. But if you want to go over any of that top-down analysis, feel free to throw any type of question or information in the chat. I will hop over to chat now, and let me take a look. But simply put, I'm bullish on NQ and ES. Therefore, I'm looking for higher prices. I'm bullish because the daily chart tapped into a daily bullish FEG. After that occurred, during New York Open, we had a bullish SMT with a bullish change in the state of delivery. Okay. Ash, are you sure in your analysis? There is no guarantees, okay? If you don't understand the randomness of price action, then maybe you should reconsider your risk management, okay? I'm never sure, right? I don't have any guarantees. There is nothing that works 100% of the time. That's why we use risk management, okay? You have to understand that anything can fail at any moment in time. Therefore, use risk management, right? Never oversize, never overtrade, never over risk. If you're not willing to take the risk, do not take the risk. Plain and simple. There are no guarantees in this business. So if anybody talks to you with a degree of 100% sureness or 100% guarantee, I suggest you stay away from that. Explain why you're taking this, chat. I just did a top-down analysis. Just rewind it if you need to hear that analysis again. Ash, if you were starting a 50K ProSim funded account, how would you plan to trade it? The same exact way that I trade my strategy now. The account doesn't change the strategy. The model remains the same. Fall in love with the process. Allow the results to be a byproduct of it. The model doesn't change. Ash is thinking ES was the stronger pair. Wrong, because it seems to be lagging, but the SMT says ES is the stronger pair. What's your take on that? Once again, anything could fail. Okay? Just because I pointed to an SMT does not guarantee the fact that ES is going to be the stronger pair. It is simply logic that helps you make your decisions. Anything could fail. You guys got to understand the randomness of this market. Just because there's SMT on the screen, that does not mean it's a guarantee that ES is the stronger pair. But if you really want to look at the data, even though ES is lagging, look at the difference here. I know you're saying it's lagging, but look how much closer ES is to new all-time highs compared to NQ. So yeah, sure, it's slower today, right? But we knew it was going to be slower because there's no news drivers. But look at the difference here. Look how far away NQ is versus ES. So even though you're saying it's not the stronger pair, I don't agree with you. Take a look at premium and discount, right? So here's 50% of the range. NQ is still at 50% of the range compared to ES, right? Yeses almost already took out the high of the range, and it's being supported by 50% of the range. Okay, so let's take a look. We will be watching NQ to see if this plays out. Ash, your OB zone is not an order block. Where am I pointing to an OB zone? I'm not sure what you're referring to there. I'm not pointing to an OB zone, so I don't know what that question is. Why do you think the daily FEG will not be an inversion and trade lower? I don't think anything. I'm not predicting the future. I'm reading the current information and then allowing the probabilities to play out. I'm not predicting anything. I don't know where price is going to go. The point is if you're capable of defining a process, if you're capable of measuring your risk, then implement your process with that measured risk. Anything after that, we have no clue what's going to happen. Again, there's a random distribution of probabilities. You cannot tell the future. So I have no clue if it's going to head lower. I have no clue if it's going to head higher. But these are concepts that I can identify, and that's what helps me measure risk. That's what helps me create a process to move forward. So we're doing any questions or information. If you have any questions about the current information shown on the chart, or if you have any questions regarding the top-down analysis, feel free to throw it in chat, and we're going through chat, and we're going through those questions now. Can you please mark the breaker block? I thought you were placing your order at the top of the breaker block. I don't see it here. This is a change in the state of delivery, right? I would have annotated the breaker block if I was talking about a breaker block, but I'm not. This is a change in the state of delivery, right? That's why it's annotated that way. This is not a breaker block. Can you adopt me? I have no children yet. I don't plan on adopting right now, so I'm sorry I can't adopt you. I don't even have a dog or anything yet. What's the lowest time frame you're trading? I've traded the 1 minute. I've traded the 5 minute. I've traded the 15 minute. I've traded the hourly. I've traded the daily. I've traded many different time frames. I have made it all the way down to the 1 minute time frame before. When you have an expected setup, as you do now, do you set a limit order at your entry point and wait, or do you manually enter, sometimes wait for better price? So when you have less conviction in your trade, that's when I would manually enter after seeing conviction in price action, right? So what I'm saying here is, if you are not confident in your information, allow price to come to that location of entry, allow price to show you that that entry is providing support for higher prices, and then market order in, right? That would be a time where I would wait for a manual entry versus setting a limit order. When I have less conviction, when I need price to provide more confirmations. Now, the other opportunity is setting a limit order at the location of entry. I would do that when, oh, hold on, chat. We got a nice surprise here. 50 free resets using code BIGWIN50. Very nice. Who's going to get one? 50 free resets using code BIGWIN50. Who's going to get one, chat? Who is going to get one? Looks like Inner Meaning got one. Looks like Lucas got one. Very good job. Congratulations to the winners. Throw a W in chat if you're able to get one of the giveaways. Congratulations. Another segment, another giveaway. Very good job. Congratulations, everyone. So back to the question. When I have less conviction in a trade, that is when I will need more confirmations from price action. So in that example, when I have less conviction in a trade, I'll allow price to go to the location that I'm looking to enter, look for a favorable reaction from that area, then manually enter. Compared to the times that I have a lot of conviction, right? When the bias is very clear, when price is moving in our intended direction, that's when I'll just set a limit order and I'll instantly enter when price taps into that area that I'm looking to enter. So the difference is when I have conviction versus when I do not have conviction. Very good question. Ash, how long have you been in trading? I'm coming up on a decade of trading here. Hi, Ash. So we shift to a change in the state of delivery when there is no unicorn setup. You need to make a decision as an independent thinker, okay? What I'm trying to say here is if you're going to decide to only enter using one type of entry model, then don't try to use any other type of entry models. It's a personal decision that you make for yourself, right? And I hope that you're making that decision based upon data. So for example, if you've been trying to execute multiple different models and you see that you're having more losses because you're switching between models, you're getting confused, you're getting impulsive because there's so many different models, then your data is stating that you should only execute one model, right? So there is no right or wrong. The only thing that you should get your information from is your own data. So if you are not capable of executing multiple different models, then when your model is not on the screen, then don't trade. That's what it comes down to. So it comes down to being an independent thinker and reviewing your own data. When there is an SMT, how can you tell which one is going to be stronger versus weaker? So here's an example of SMT right here. Right, so take a look at this. Using the same 2 points in time, okay, 8:15 candle to 9:45 candle. Using the same 2 points in time between NQ and ES, right, 8:15 candle, 9:45 candle. So analyzing the same 2 points in time when two correlated assets are doing something different at the same 2 points in time, that's what SMT is. Okay, so when you're analyzing bullish SMT, you're analyzing the lows. Ready? Here's NQ. Here's ES. These are the same 2 points in time. So let's just say this is the 8 o'clock low. Look at how NQ at 9 o'clock took out that low compared to ES. The 8 o'clock low was never swept by the 9 o'clock low. The pair that creates the failure swing is the stronger pair. So this would be the stronger pair. Now, once again, I've said it before, I'll continuing to keep saying it. There are no guarantees in price action. So even when you analyze SMT, even thinking that ES should be the stronger pair, that does not guarantee you that it will be the stronger pair. There are no guarantees in trading. Plain and simple. Okay? Same thing with bearish SMT, but now you're analyzing the highs, right? So when looking for bearish SMT, you still want to look between NQ and ES, but now we're looking at the highs. You still want to use the same 2 points in time, and the pair that creates the failure swing is the weaker pair, right? This one would be the weaker pair because it did not sweep the swing high that NQ did sweep. Okay? So very good question regarding SMT. There's your example of SMT. Ash, NQ is sitting between 2 daily FEGs. Do you navigate this a different way, maybe in terms of sizing? I understand what you're saying, but I use the most recent information. Okay, so for example, this FEG here has been created more recently than this FEG here. So when I analyze, I'm looking at the most recent information. For this reason, I'm not looking at this right here. I hear what you're saying. Yes, it is between 2 FEGs, but this FEG here is not a part of my analysis simply because I look at the most recent information. So this is my analysis here. This is what I'm focused on. That's why I have a bullish bias. So key there is using the most recent information. Most reliable prop firm in the futures market, MyFundedFutures. Hands down. Ash, with SMT, does it mean we should monitor ES rather than NQ? Once again, you long the stronger pair, you short the weaker pair. So if you want to be analyzing ES, be my guest, right? It's the same information here. Right, the change in state of delivery would be here. Again, there's no guarantees. It doesn't mean just because there's SMT that ES is guaranteed to be the stronger pair. Yeah, so that just goes to show you that there's many different terminologies, right? Alvar Velez, who has been in the game longer than ICT, has the same exact style, but instead of some wizard names, he says 50% retest of a bar. Yeah, it doesn't really matter the terminology. That just goes to show you there's nothing new under the sun. We're all looking at the same exact information, so it doesn't matter what you call it. The terminology doesn't matter, right? So like, for example, like let's talk about this a different way, right? You could have said that price found support at a location of support, right? After bouncing from support, it then broke resistance. After breaking the resistance, we'll see if during the retest, we'll get supported for higher prices. So how does that sound? But, you know, that's just semantics. I don't even, who cares about that, right? It doesn't matter what you call it. If you're focused on that, then you're focused on the wrong thing. What you need to be focused on is risk management. It doesn't matter what people call it. Terminology doesn't matter. Coupon not found. Yeah, the giveaway already occurred. I can guarantee you that the giveaway, there's 700 people in here for only 50 resets. So they will go very fast, right? So they're definitely gone by now because everybody used them already. Ash, do we have a bullish bias? I'm currently bullish because of the daily chart. I'm bullish because price tapped this bullish FEG on the daily chart right here. For this reason, I'm bullish. So I'm looking for this area to act as an area of support for higher prices. I'm gonna start using different terminology myself. That way we can cover all the conversations. So we're looking at this area to provide support for higher prices. Yeah, that means you were late. If the coupon is no longer available, that means the coupons have already been used and there's no more left. The early bird gets the worm. If you're going to be late, then you're going to miss out on the opportunity. MyFundedFutures is best prop firm. I requested a payout and it was instantaneous. Amazing job, Carlos. Let's get a W in chat for Carlos. Congratulations on the withdrawal. Very good job getting a payout. Let's go, Carlos. Very, very good job. Ash, you got to upload your wedding speech. Man, I was shaking in my boots this past weekend. Oh, geez. I was, what is it called? I was officiating a wedding this past weekend, and man, talk about nerves. That was so much more nerve-wracking than hopping into a trade with 4 cons on NQ. Like, without a doubt. Man, I was shaking. I was sweating. I was stuttering. Like, it was that is what is actually hard. Doing something so important for your family. Man, that was really tough. Talking in front of 200 people, trying to provide the best experience for the individuals getting married. It was hard. I'm very happy that it went well. I do think it went well. I'm probably not going to upload that. So we'll give the individuals their privacy. But what a difference. What a difference. Right. I'm able to come in here and slap 4 cons of NQ on here and be able to be emotionless. But when I go to officiate a wedding, there comes all the butterflies and the nerves and the like, it was so much harder to officiate the wedding compared to taking a trade. So it just really brought me back to emotional and mental intelligence. I can clearly see why so many people have so many issues day trading, because when you're thinking emotionally, when you're having these emotional reactions, you operate differently. You think differently. I mean, quite so. For example, I was so nervous at one point that when I went to turn the page in the officiant book, I couldn't grab the page. My hand was shaking so much that I couldn't even turn the page over. So I could only imagine, like, for the individuals that get really nervous about taking a trade, how hard it must be to trade if you're thinking emotionally. So it without a doubt, there's nothing easy about this. Okay. And if I have to say anything about this, is this game is truly 80% mental and 20% chart. If you could win the war in your mind, you will be able to implement your risk management on the chart. Right. So if you're that individual that is still being impulsive, if you're that individual that is still shaking in your boots, like if you get nervous when you go into a trade, the best thing that I can say to you is gain more experience. So instead of trying to get to a certain goal in such a short period of time, choose to gain more experience. How do you do that? You could be back testing. You don't even have to be using money. You don't have to lose your money to gain experience. That's the first thing. So if you're not in the right financial state to be risking money, then just choose to back test. Choose to learn without using money. Very simple. You don't need to, risk your money to gain that education. But after you've, gotten into the right financial situation, then yes, I would say go buy MyFundedFutures eval, because it is completely different risking money, right? When there's money on the line, you are going to feel those emotions, and you need to feel those emotions so that you can become a better operator. But take it one step at a time is what I'm trying to say here. Do your due diligence first and then try to risk. When you're risking, do not risk all of your money all at once, because the fact of the matter is you need to have a lot of experience. You're not going to understand all of the emotions that price induces after one eval, right? You're going to have to fail forward. You're going to have to gain as many experiences as you can, because once you gain those experiences, that's when you're really going to learn about yourself. And that's where you actually make progress. Okay. There is no system in the world that has a 100% win rate. There is no model in the world that is going to change you from being not profitable to being profitable. The thing that's going to change you is your ability to control your emotions, your ability to control your actions, your ability to control your thoughts. Once you know thyself, that is when you will put the processes in place to implement your risk management. So learn about yourself. Okay, stop trying to follow somebody else, because no one is going to click the buttons for you. You will have to take 100% complete ownership of all of your own abilities. And once you learn about yourself, you will then be able to operate better. That's when you'll be able to implement better risk management. Okay, so man, that what an experience that was. Officiating that wedding was so much harder than taking a trade. It was really mind-blowing, to be completely honest. And I haven't really felt like that type of emotional response in a while, because when I come here on stream with you all, I detach those emotions from the outcome. I fully accept the outcome before any buttons are pressed. What a difference. What a difference. So once again, just a quick recap of what we were looking at. Bullish because of the daily chart. We were bullish because NQ tapped into a bullish FEG on the daily chart. After creating a bias, that is when we went in looking for SMT and a change in the state of delivery. I'm pointing to the SMT and the change in the state of delivery right now. So due to the daily chart being a bullish bias, due to the confirmation of the SMT at the lows, we have been looking at this change in the state of delivery right here for higher prices. Okay, so let me go ahead and use some different terminology real quick. Okay. We are looking at this area on the daily chart to provide support for higher prices. That is why we're bullish. Then when you go down to the lower time frame, it looks like we were consolidating sideways for quite some time. After consolidating sideways, we broke out of the top of this range. After breaking out of the top of this range, we then started looking for higher prices. All right, you can see the breakout in here. So we're seeing if we can get a break and retest. We're seeing if the retest of this breakout will provide support for higher prices. So I got another 14 minutes with you all before my segment comes to an end. If there's any information, if there's any questions, if there's anything you'd like to go over, feel free to throw any questions or information in the chat. If you're finding any value from any of this analysis, if you're finding any value from any of the giveaways, if you're finding any value from all the hosts and the guests that we have here on stream, do us a favor, sub to the channel, like the stream, turn the notifications on. We continue to keep doing this every single week. Ash, do you ever enter off the 1 minute time frame? Yes, I've had entries on the 1 minute. I've had entries on the 5 minute. I've had entries on the 15 minute. I've had entries on the hourly. I've had entries on the daily. I've had entries on the weekly. Ash, what is your weekly profit target? I do not have a profit target. I look to manage my risk every single day. The results of that is a byproduct. Bro, can we just pump now? Yes, please, right? My long-term bags would greatly appreciate that. Let's just send prices into the stratosphere. Let's just send it to the moon, please and thank you. June, I already answered your question about no unicorn setup, no trade. It's very simple. If you're only going to execute one model, if your model's not on the screen, don't trade. Been in along for an hour now. Yeah, so during the top-down analysis, we pointed out the low expectations, right? Low expectations look like this right here. When there's no red folders, right? Price doesn't have any reason to have volatility. So this makes complete sense. This slow, choppy, lethargic price action. That is why during the top-down analysis, I said, have low expectations today. There's no reason for price to go higher, right? So here's a great example of that. Ready? What is this candle here? What happened right here? What was this? Why did price so quickly move in one direction? That was when Jerome Powell was speaking, right? A high impact news driver. Jackson Hole was an event that occurred right here. Jerome Powell was speaking, right? Trump was also speaking this day. So there's news drivers that push price during the time of the news driver. This is what I'm trying to say, is when there's no news drivers, like right now, there's no volatility that's going to be injected into the market. Now look at the difference. Look at when there is a news driver, right? Here's Jerome Powell speaking. This thing goes screaming higher by 300 points. So compare that to today. Today, nobody's speaking. Well, today, NQ has only changed 29 points. Go figure. That makes complete sense. ES is flat on the day. It hasn't even moved up a point or down a point. This thing is flat. It makes sense. There's no news driver. So it's very simple. On days that have no news drivers, be more patient and selective than normal because we need volatility. We need our P&L to fluctuate. The thing that makes P&L fluctuate is red folders. So on days that do not have red folders, be more patient and selective than normal. Ash, on the daily time frame, how do you know it's not an inversion retest? I don't know anything. I know that I sound like a broken record, but I'm going to keep repeating it because this is a fact. There are no guarantees in the market. Nobody knows what's going to happen next. Okay? If anybody talks to you with a 100% certainty, I highly suggest you walk the other way. Nobody can tell the future. So if they tell you they know exactly what's going to happen, I'm sorry, but they don't know. Nobody can predict the future. It's a complete gamble. If somebody's telling you that they know exactly what's going to happen, you're not smarter than the market. The market will humble you. There's just no such thing as a 100% win rate. It's just not real. That is misinformation. Please don't fall into that misinformation. Ash, do you trade the same unicorn model in all time frames? Yes, it doesn't matter what time frame you're on. You can trade the model. Ash, what makes you determine if you want to use a 1-minute change in state of delivery or breaker versus a 5 or 15-minute? Your data. Your data shows you that. Right? After completing a year's worth of data, if you see that a 1-minute breaker provides the most amount of losses for you, then you should probably get off the 1-minute chart. Right? So collect the data and then objectively analyze the data. Right? So if you have a 60% win rate trading the 5-minute chart and you have a 20% win rate trading the 1-minute chart, I think you should get off the 1-minute chart. So the answer is, how do I determine whether to use a 1-minute versus a 5-minute? Is your data. Your data tells you that. Ash, you use SMTs? Yes, I do. That is why SMT is annotated right here, because it's being used. Ash, on the daily, you mentioned a bullish FEG, but right now we are inside a bearish FEG. I use the most recent information. Okay, so this FEG here is older, right? It was created on Tuesday the 19th. This bullish FEG here was created on Friday the 22nd. I use the most recent information. That is why I am pointing to a bullish FEG. Price just tapped into a bullish FEG. for that reason, I'm bullish for price to move to this swing high. I use the most recent information. Ash, do you use candles? No, I don't. I use lines. Let's get the line chart going here. Where is it? I no longer use candles. I use lines. Ash, what is a line? I don't know. It's a rectangle, or actually, it's a circle. It has no edges. It's just smooth all the way around. That's what a line is. Ash, are you a trader? No, I've never traded the markets. I don't. What is trading? What is trading, chat? What is this trading thing you speak of? What is Ash? Ash is catching them all. That is what Ash is. Gotta catch them all. Ash GBT. Yeah. Do you use new day opening gaps? That is not something that I focus on. New day opening gaps is not something that I focus on. Ash, how many weeks, months would you say it takes to make 15% to pass a prop firm challenge? There is no average, right? It's contingent upon the individual. Some people will just full port their eval and they'll pass or fail within 2 seconds. So there's no right or wrong to that answer. Some people it takes days. Some people it takes weeks. Some people it takes months. There's no right or wrong to that answer. It's unique to the individual. Ash, do you prefer higher win rate but lower RR? No. I'm a 50% win rate trader. I focus on 1 to 2 risk to reward. I've shared the stats to my live account many times on my Twitter account. You can find them there as well. So I'm a 50% win rate trader. I focus on a 1 to 2 risk to reward. Ash, where was yesterday's piano? Well, I put it into the bathroom so that I can play piano, in the mornings when we hit the bathroom. And then I had to move it back out of the bathroom because there wasn't enough room in there. You guys got the comedy today. Seems pretty legit. Yeah. I mean, who doesn't play the piano in the bathroom? All right. So great session today. Thank you all for all the questions, all the comments. I really do appreciate going over all this information with you all. It's a lot of repetition for us. So let's continue to keep relentlessly working and learning every single week. Once again, just to leave you all with my closing thoughts, I have no expectations today. I've been trying to implement that. I've been trying to show you that with the economic calendar. There's no news today. So I have no interest in thinking that price is going to see the move that we want to see. I'm most interested in remaining patient and selective for that reason. Price doesn't really have a reason to be moving in one direction right now. For that reason, I'm going to remain patient and selective. I have low expectations today because of it. So if you're looking at this position here, I'll go ahead and update it on the socials after this. But I'm not looking for a lot here. I'm not looking for this to go 140 points higher. So for that reason, I'm just going to stay out of it. I'm going to choose patience. I'm going to choose risk management over that. I have low expectations, and I've been trying to communicate that all morning. So with that being said, less is more, quality over quantity. Risk management is always going to be the number one priority. Let's go ahead and hand the mic over to Tom. Stick around for Tom's segment. He's got a lot of value to share. Let's go ahead and welcome Tom up on the stage. I hope you all have a great day.
Hey, everybody. Welcome. Hello. Thank you, Ash, again for the awesome session and for lots of value. W's for Ash. Thank you. Thank you. It was, I'm always enjoying to listen. I always able to come back here. I mean, sometime like 20, 30 minutes for Ash's segment, and there's always lots of value there. Thank you again. So, hello, chat. Hello, everybody. Special hello to the mods, the hosts, everyone. Hope everybody's having a great day. So here we are, back at it again. Hello, chat. Good to be here. So, yeah, what a day, right? What a day. I hope W's for everyone worked out so far. I mean, hopefully Green Day, as usual. You guys need the music? Don't worry. We're going to have the music soon. I'm going to have to make a short version, but don't worry. What's happening? So, again, as I usually say, if you already, printing money, then I would say walk away. No. Stick around. Stick around at MyFundedTV. And, the daily routine, you already know the routine. Call up your friends, neighbors, ex-boyfriend, girlfriend, ex-wife, husband, whoever, high school friends, teachers, everybody in the neighborhood, subscribe to MyFundedTV. That's the goal. I had a nice position it was a tricky one. I'm going to go over this one because it was a tricky one. But yeah, there was a position there. What if you're burning money? Well, at least enjoy it. Like Pablo Escobar did, But no, if you're burning money, sit back, relax, and obviously listen to MyFundedTV, Yeah, I was in the London trade, which actually went to profit. The thing is, I closed it manually. I remember, Pigeon. I closed it manually after the stream. So I went into a long position. So let's do a recap of what happened in London so far. And there's some interesting technical values that I like to show you guys because I think it's just super important, and it's also amazing. That's why I call this art. The volume weighted average price called. That's what I call it. How's everybody? Pigeon, I'm going to break this trade down for you. But first, just a quick recap. As you can see on the 5-minute right now, it's barcoding, right? Just the usual stuff. I'm definitely not interested to take any trade. There's one more level down there that somewhat interests me. Is basically a London low at 415. Otherwise, I don't see anything to the left here. I mean, if we look back to yesterday's PM session, all the slow grind down on the stairs and a bit of a drop here before the 4 p.m. close, there's no specific level, zone, or whatever that we can look for, Someone told you I invited the volume weighted average price. That's not true. I'm not going to say it. Don't worry. I'm not going to say this price action yesterday, PM session, there's nothing here that I could look for as possible targets. the only major targets are here that I was looking for. The 520 as a possible zone high, but I'm going to go into that too. There was a beautiful textbook supply zone here at the Asia session. So let's just really quickly go into what happened during the London session. So I started somewhere around here at 2 a.m. Eastern Standard. And so we were already in the zone. Trading, we were already in the zone, pretty much going sideways. Now, my goal, my anticipation was basically to break this level at 509. That's what I was looking for, somewhere around 2 a.m. Eastern Standard. So it actually didn't happen. And we talked about this, like, why don't I just take a long position if I'm so sure about it? Because yesterday we talked about the levels. If I know my level, and if I know that I want to go there, and we see this consolidation, which is basically in ICT terms, we can call it accumulation somewhat. I mean, yeah, let's just stop here for a minute here. If this is the accumulation here, this area right here, if this is the accumulation, and if this is the manipulation leg, you know, distribution all the way basically higher, that's basically something we can look for if we anticipate that that was the accumulation phase. Anyway, I didn't do that. I really wanted to take a long position, but I didn't. So actually price went down. And if we go to the 1 minute, and that's, you know, that's why I keep doing the technical review for those of you who are interested of why these zones could be good targets or could be working. As price slowly went lower, there was a 1 minute demand zone here just before 1 a.m. Hey, Mike, good to see you. Pixie, hey, good to see you too. So, Ash, you know, I wanted to say to you something. I mean, we never do our segments that I can say hello to you. You always just put me on instantly, solo transition, and no chit chat. Why is that? Just trolling you. Ash is super busy businessman, by the way. No, I'm just joking around. So, anyway, he doesn't hate me. I hope he doesn't, right? So, I would love to call. Me too. All I see, I'm going to tell you a little secret, guys. I see that. Can we do solo transition? I already know. No, Ash, where is he going? He's just leaving the building without me. I'm like, come on, man. I wanted to pick your brain anyway. But don't worry. Hey, I'm just joking around. I know you're busy. We can do that, Ash. I'm definitely not going to mess up your segment. I'm just joking. I hope everybody knows that. But hey, he's leaving the building early because he's managing all those funded accounts. I know what's he doing. He's managing all those funded accounts one by one. You know, he's printing money, right? He's busy. No, okay. Let's. It was just saying. Anyway, let's move on. Come on. So basically, we have this demand zone here on the 1 minute, which I didn't take a trade on this one. I want friends. I'm lonely. Really, I don't have friends. I'm lonely. I'm not going to sing about it, but we have this demand zone. Price went down into this segment, and there was another one. If we go back to the Asia session, there was another demand zone right here. Oh, yeah, because he goes to the gym. By the way, FYI, absolutely trading related thing. I'm going to go to the gym from next week 4 times a week. 4 times. One of my good friends is working as a personal trainer at the gym. He told me there's no more excuses. I have to go 4 times to the gym from next week. True story, really. So by the time I get back to MyFunded TV every day, I'm going to be buffed up. You know, let's go. Anyway, there was another demand zone here in the Asia session here. And this was that zone. And obviously, as price went down there, I was actually following what was happening. The thing is, because this was just a minor level, I wasn't really following up to this movement. I mean, we were watching price action, but I was all the way in the London session. I was looking for some sort of a push to the upside, which never really happened. But the thing is, it took the zone here somewhere around the 420 something area. I'm not lonely. I'm just joking, of course. Abyss is always here. So there was a low here. Actually, it didn't take it out at 414, I guess, in the Asia session. It's still valid. So the low is 414.75. And London missed it by a tick, basically, or 2 ticks. And then it reversed. So what I did during the London session, because I so wanted to see this go higher into that zone, I took a long position somewhere after 4 a.m. Eastern Standard. We were waiting for the pre-market open. So I took the long position and I closed it somewhere here manually. I don't even remember. I think I did the right thing. Actually, my TP was higher. No, actually, I closed it earlier. My TP was somewhere around 96. I remember that it pulled back here and it made one more push to the 80s. Then I closed it manually. But eventually, it was good. What I was looking for is basically to break the supply zone up there. I mean, this supply zone. The supply zone high was at 509. And that's what I was really looking for. It didn't really happen. So then we arrived to the 9:30 market open. And so 9:30 market open. Now, what this thing here? This would be the first presentation gap hype, or whatever it's called. First fair value gap, first presentation gap, first magical gap, or I don't know what's the name of this. But basically, this happened right after the market open at 9:31. Now, I immediately put this rectangle here and extended it to the right. And this is what actually amazes me. And I wasn't really into this concept, and I'm still not like not using it as a concept to my trades, but it always amazes me how the market actually is just hovering around sometimes, especially when it's a little bit rangy on the first presentation gap. Yes, thank you, Heather. Yeah. So it's definitely somewhat amazing, because this, I wouldn't say it's random. There was something here like an anchor, whatever, but the market was definitely using this 490-ish level. Now, what I tried to do is I tried to go for a scalp for 520. It took me out. Anyway, overall, I ended up in the green. And eventually, when it took out my stop just below the first presentation gap, it went higher and took out that 520. Now, ever since then, this price section is something I really want to avoid. So definitely first presented fair value gap. Yeah, thank you, Naked Chart. So yeah, something like that. Whatever it's called, the first gap here after the open, it's definitely something interesting to look for. I mean, at least even if you're not using it, and I'm not using it, but it's just interesting to see how price is reacting to that level. I did actually a small back test, like to the past couple of, I was backtesting the past couple of weeks, because backtesting the whole year, it would take much more time. But as far as I've seen, and of course I'm forward testing, I'm seeing this every single day, like this is just amazing how this area, it could be like a small area, or it could be like a thick gap, like a real big one, but still it's like amazing how the market is actually respecting, or at least it acts like a magnet or something. So I'm going to be curious if NQ wants to take this level down below the 500. We'll see. I have a feeling that it just wants to. So if I would have to take a guess for just a scalp trade based on intuition, I would say, which I'm not going to do, I would say we could go back down below the 500, like back down to that 490. But otherwise, I'm not going to take any trade on this, right? So anyway, that was kind of interesting. Previous day high is basically still up there. As I said, I'm not interested at that high. The only thing I'm still interested, because of the relative equal lows, and that's why I went through the London recap, is this area. So 415 is a London low, and also that's a swing low in Asia, relative equal lows there. So that level would be more interesting to me if this one would sell off, but I'm not really anticipating anything in this, so that's it. Yeah, I like this market is definitely tricky. I mean, usually like the first 90 minutes, is somewhat telling us what to do or what not to do. And I wanted to talk about this, by the way, the first 90 minutes, the power of the first 90 minutes. That would be, I have two topics for today, by the way, two short topics. So it's not going to be like, we're not going to go down to subatomic deepness here, but definitely it's important to talk about the first 90 minutes. I would say that the market is basically telling you the story in the first 90 minutes. You can actually choose the London session too, but definitely it's much more visible at the New York Open, right? So the market is basically telling you the truth in the first 90 minutes. That's when volume is obviously the highest, emotions are basically the rawest, levels are getting tested, you know. And if you learn basically how to master that first 90 minutes, that's actually it. You don't necessarily have to sit in front of your charts like 6 hours, 8 hours, 12 hours, whatever, right? So many day traders are just, you know, trading the first 30 minutes, 1 hour, 90 minutes, whatever. So we're basically talking about until like around 11 a.m. And usually that's what I'm trying to use as well. It's basically the first 90 minutes is not just like a market opening. It's basically the market is confessing to you like what is the real deal. Like usually when we have some important levels like we did here, I think the final quote unquote important level in this AM session was the 520. So once it got to 520, and it was a little bit early, like we were still in the first session of the silver bullet hour, I told myself that, okay, we're done. Basically, this was the move. Even if it goes higher, I'm not interested because, yeah, it could go for the previous day high, but these were the nearest levels that I could look for. And we're already in the silver bullet hour. As I saw the market actually going sideways and we're approaching the 11 a.m. hour, I was like, okay, this is it. It's done. It's done. And actually, that's why time perfectly lines up with the narrative. And that's why tape reading is also important, right? So we're going to talk about tape reading as well. Yeah. If you tape read the market, and I would say if you really want to put a story on the first 90 minutes, you have to go down to the 1 minute chart. And I know not everybody likes to trade on the 1 minute chart. I understand. And basically, one of the side quests for myself is to try to aim more on the 5 minute chart and the 15-minute for entries. But if you're looking for a tape reading narrative, it's always good to go down on the 1 minute and see what was really happening. Okay. So what we saw here is basically almost like the seek and destroy pattern. Like really, we just took liquidity here on the first spike higher and then took some liquidity from the opening price here on the downside, then went higher and then lower. So it was a little bit crazy. I know, I understand. And still, as we saw this liquidity sweep up and down, I was keep saying to myself, especially after this sweep here below the 437, it started to push strongly to the strongly higher, and that's why I decided. I said to myself, if we get through, and basically it's like partially implementing the first fair value gap. Silver bullet key price, yeah. Sorry, yeah. So as soon as we went through this first presentation gap, I started to think like, okay, if this gap is going to hold, then there's a very high chance that this should be going for the 520. And obviously there was a bit of a struggle here. It took like, well, almost 20 minutes, well, 15, 20 minutes to go for it. And when finally we got there, that's when I said, okay, I think we're done. So one level got played perfectly. The next level, the only level that I would go with is maybe that 415. So the first 90 minutes, basically, as I was saying, seek and destroy pattern is basically taking out highs and lows simultaneously. That's it. So we can define this, the seek and destroy pattern like multiple ways. Like if you type into YouTube or Google like seek and destroy ICT lecture or pattern, whatever, you will find hundreds, maybe thousands of different videos about it. It's basically, to simplify it, taking out highs and lows simultaneously after one by one. Just a quick example. There was a swing high here at 6:40 Eastern Standard. This spike actually took it out. Perfect. Then went down. I mean, after the market opened, the 9:30 candle or the range would become more significant. So there was a swing low here. It's 466. So let me just put this out here. So one swing high here got taken out. Then another swing low, which is somewhat significant, got taken out as well with this spike. And then the market went higher, took out this high. And then, this high got taken out. And then went down, took out this low again. And then even lower, took out this low. And then reversed, took out this high. So all we are seeing basically is these levels are being swept. Now, obviously, it's not a perfect example, but somewhat still usable. Like the market actually swept liquidity as much as it could after the open and finally finished up the job, in my point of view, at the 520 level. That was that was the point when I said, okay, the narrative for the first 90 minutes is like almost done, or maybe completely done. So that's when I said, okay, even if it goes higher, I don't care about it because I have no targets. So 520 being taken out here at 10 minutes after 10 a.m. And I said, okay, liquidity has been swept on many levels. We'll see what's going to happen. Now we're back to a consolidation phase. Look at that. Look at this. Wow. It's just interesting to see what price is doing. Are we going to go back down into the first presentation gap? So anyway, it did that, went sideways. And as I said, the only strategy that I left with until 11 a.m., I told you guys I don't really like to put on trades after 11. So here was the 11 a.m. hour. And as we went higher and started to go sideways, one thing you can notice. Yes, I got Rep Realm. Yeah, I have multiple trades. Yeah. So as we went sideways, one thing you can see, like the time is running out, right? So the markets are definitely timed. I do believe that the markets are timed. But that would be a different topic. Not just ICT talking about it. There's some lot of other theories about this, and many different lectures, theories, concepts about the timing of the market. Now, as we're approaching the official end of the New York AM sessions kill zone, which is some traders are saying it's 11 a.m. Some traders are saying it's 12. I rather like to go with 11. In the past year, I was definitely I was noticing down like what's that hour of the AM session, or what's that time period by the time the market is definitely finished up with the move? What's that time, statistically speaking, by the of when the market is like 80% done with the AM session movement? Mr. Smith, I noticed that market sometimes that moves in 30 minutes. Yes. It can finish up in 30 minutes. The market can be done in 15 minutes if it wants to. What I'm saying is that as much as I did a lot of backtesting as well, and in the past couple of years, and what I've seen so far, and that's why I like to go with the 11 a.m., is that the setups are definitely, I mean, I have lower probability setups after 11. And most likely the major move is done. Like 80% of the move, what the market really wanted, is done by the first 90 minutes. Okay. So that's why I'm saying basically the first 90 minutes, it's not just the market open. It's basically the market is confessing to you in the first 90 minutes. All right. There could be like liquidity surge, right? Overnight orders, institution, retail orders all collide at the open. We see the volatility spikes, price moves faster, levels got tested harder. We all see this. It's just happening. The true range, that some people are saying, yes, the true range is set. What's the true range? Like, there's also multiple definitions of what's the true range. Highs, lows of the day are established as well, or taken out, by the way. That's why many day traders are looking. I know I'm a bit more technical right now in this segment, but there's psychology aspect topic today as well, just a short one. But on the technical side, the first 90 minutes is also good to take out those specific levels like London highs, lows, like everybody's seeking to get those levels in that first 90 minute, right? And of course, there could be the information dumpage, as I call it, like news catalysts, overnight flows, gaps absorbed quickly, maybe. If there's a gap maybe left open, it could be a liquidity void or an unbalanced price range left open since the London session that can be also quickly absorbed. Now, let me give you a quick example, and I got fall into the trap on gold. Oh my God, look at gold. There is something on gold. I fell for the trap. Gold did dirty on me. If we go back to the Asia session on gold, and I know it's just a 1 minute time frame, but this is just a good example. I noticed after the Asia Open, there was a 1 minute gap on the mini, not on the micro, on gold at 34.12.5. So as the London session started, look at what happened. Gold started to drop down there. I was like almost 100% sure that it's going to take out or actually reprice that 34.12.5. It didn't. Okay. Actually, I took a short on one of my evals, so I made some profit on this, but only on evals in the London session. And so in between New York and London session, it tried again. Look at that. It went down again. It went all the way down to 13. All it needed was 5 ticks. 5 ticks. And it didn't go for it. Almost created relative equal lows here. So it kind of messed up my thought process. So after the New York Open this morning, I was in a short position live on my stream. So I was taking a short here on this fair value gap. So I did lose a trade on gold. So this was the area that I took the short. And obviously you can see how perfectly it played out. So instead, gold just said, no, not today. Not today. So gold just went higher. I was definitely aiming for that liquidity void. Okay. Now, that's just a quick example of what retail traders, sometimes even market makers, want to look for. Absorb those gaps or liquidity areas, right? So the first 90 minutes, as I was saying, you can map out all these levels. Now, obviously, don't fall into the analysis paralysis situation. Like if you're mapping out too many levels, we talked about this. Gone long, and you was talking about it. Still in it. You're still in it. Nice, Pigeon. Okay. So obviously, yesterday we talked about the major levels that you're looking for. If you're not comfortable, now let me say something. The liquidity void, especially on the 1 minute, is not a strong level. I wouldn't see it as a strong level. That's just a minor level. So forget about it. The strongest level, I mean, you obviously have to categorize like what is a stronger level for you or for your understanding, your trading style, your entry model. It's definitely a choppy market, yes. So liquidity voids, especially on the 1 minute, that's just a minor level. The strongest level for me are always the zones. The higher time frame, it's the better. But even sometimes a 1 minute zone can be a strong one. So anyway, in the first 90 minutes, the market shows its hand, basically. After that, basically, it grinds its cards. That's what it does. So yeah, the first 90 minute is where the market, I think, it shows its hands. Now, it works somewhat similar in the London session. The London session, it's just not about the London Open. We have the pre-market open as well at 4 a.m. Okay, so definitely have to take that into consideration as well. And so Yeah. So there are some patterns that you can look for in the first 90 minutes. Obviously, some traders are using the 5 to 19 minutes to define the highs and lows. Those could be acting as support and resistance zones for the rest of the session or for the day. As I said, gap fills or continuations, okay, liquidity hunts can also be happening. So this would be, I don't know if we can say that this is a seek and destroy thing that just happened here. Actually, I'm just pointing on this one most likely. So I don't know if officially we can say that. I'm just going to say maybe if it's not a seek and destroy, I would definitely call this a liquidity hunt. Okay. It was definitely sweeping liquidity as much as it could. Now, consolidation, if we go to the 5-minute chart, and I know I'm a little bit more technical now than I used to. If we look at the 5-minute chart and we see how much it is barcoding out right now, we could see this area here as a possible, it's not a perfect, but anyway, as a possible accumulation area. It's accumulating positions, could go sideways even until the end of the lunch hour, and maybe it can go for a previous day high. But as I told you, since it's not in my trading plan, I'm just not going to go for it. Dave, thank you so much for being here. Have a good one. All right. So it could be going higher, of course. Something is happening. Oh, yeah. It's happening, everyone. It's happening. 50 free resets. 50. Back again. Come on, everybody. I need to get one too. I have to log in through my phone again. I can't do that. I'm too slow. Come on, everyone. We're back again 50 times. Come on. Oh my gosh, congratulations, by the way. Hope you guys got it. 50 resets. We do love the free stuff, yeah. Free stuff. Congratulations to the winners. Put those W's. Awesome. That is great. Congratulations. Oh, yeah. So as I was saying, these patterns like the opening range, gap fills, liquidity hunts, these are definitely important. Yeah. So obviously, and if the day is trending, we could see those trending days. It's trending throughout from London session all the way to New York and more. Strong momentum is definitely pushing through key levels. So most days basically don't trend because of launch moves, I would call this. They trend because of what started the open, right? So this could be still a trending day or end up as a trending day if the goal was to sweep all the liquidity like up here and down here and just continue higher. It can happen. We at this point we definitely have to look for higher time frames. If I go to the 1 hour here, there's nothing here that I like. Nothing. To be honest, there is a zone at 800 which I don't really like. I still have that level at 269 down there. There is a demand zone. Anyway, however I look at this, whichever time frame I'm choosing, I just don't like the upside, so I'm not going to do anything. My only game plan is going to be the short trade if it goes that way, right? So that's basically it. Obviously, yeah. So obviously it could be a double-edged sword. Yes, it could be. Like the pros is basically like it's a good opportunity clearing the levels. If you have your levels lined up for that first 90 minutes, it's definitely has its pros. Like price can be sweeping. Like if you're looking for the sweep like today, then definitely you have as many opportunities as you want. Like if you're scalping in between these levels, that's a good thing. The bad thing is that it's easy to overtrade in a session like this, right? You chase it, oversize, blow up the account fairly quickly. So that's why you need to be really careful. Basically, the 9:30 open is like fire. It will cook food or burn down the house. That's what basically is. Anyway, definitely, I mean, you can, how to trade this safely, and not just this day. I'm not just talking about this current situation, like this liquidity hunt or whatever we can call this. There are some things that you can do. Obviously, the pre-market setup and the analysis, like do more pre-market work, basically what I'm saying. Mark the overnight highs and lows, obviously. Pre-market levels, days and previous day highs and lows, that definitely helps. Decide what you're looking for. That's what I was saying yesterday. And whatever is that you're looking for, you have to make the decision, especially if the market is just going up and down. If you're seeing this happening, you got to have a strong conviction of a certain level that you're looking for throughout the day. Okay, it can be a zone, it can be a previous day high, it can be a London high or low, whatever. But if you're seeing this, or especially if you're seeing this chop, so for example, if up there, this would not be like a previous day high. This would be like it would be like a textbook supply zone at 616. Then I would definitely be saying to you guys that, okay, I'm interested to take a long position, even though we are in the lunch hour. I'm interested to take a long position if this one shifting the 539 and pulls back into a fair value gap. I would be taking a nice long position if that's what I'm looking for. And this is, and I repeat this, exactly why I was talking about the levels, the significant levels that you need to put on your charts before you sit down. I mean, obviously, you cannot put on the chart before you sit down. So first you have to sit down, put it in your chart. Okay. All right. I know. Obviously, wait for the confirmation, just like we talked about it yesterday. If we are in a chop, which we are in right now, what would be your confirmation? So if your game plan is to go long, or if my game plan would be to go long, my confirmation would definitely be to wait for a shift. Oops, not order block. To wait for a market structure shift higher, which would be at the 39. And I need an up close candle. That would be better. So not just a wick. I need an up close candle. Okay. If there is a fair value gap left open, maybe even this one. I know that this is below that level, but maybe I would be using this as a possible pullback. So the plan would be like something like this: go higher, take up liquidity from this gap, and finally go up there. So if my level would be up there, or if that's what you're looking for, you want to see previous day high being taken out, you need to have a game plan. If you see the chop already happening, that's fine. You just have to mark your game plan on the chart. There's nothing wrong by putting on some markers, some drawings, whatever. So anyway, there are some things that you can do, especially in the first 90 minutes. Obviously, regarding a trade like this, and I just go back to the 1 minute for this example, on a day like this, what you really need to do is limit your shots. Obviously, 1 to 3 trades in a session like this. If you're having 3 losses in a row in a liquidity hunt like this, that's definitely a red flag that you need to leave it as it is. Okay, it's just not going to work out. You have to wait for maybe the PM session or walk away, right? So yeah, even if you have a setup or if you see something, you definitely need to make sure that you're seeing your A+ setup. So if my game plan was to go for 415, which almost I did, my game plan would have been to enter a short trade here. Actually, I did that. Sorry, I did this. I completely forgot that I was short live on stream. So I actually entered, my game plan was to enter short here before 10 a.m., which I did. I was targeting for 416, and my stop loss was somewhere up here. So this is where I got taken out. So I played out my game plan. It didn't work. And that's why I tried to do a scalp trade for the 520. It didn't really work out well. I wouldn't say this is my best day, that's for sure. So anyway. And obviously you have to know when you're done for the day. Even if you're losing, you have to have some sort of a trigger, even if it's on the negative side. Like you have to know when to stop. What is that number of trades? What is that limit in dollar wise, right? That's also important. Basically, as we were always saying, the market pays the patient in the morning, but it punishes the desperate. I know it's hard, but it's heavy actually. It's punishing the desperate. Yeah. And also there comes another thing about this first 90 minute. I would call it the afternoon trap, basically. Oh, and by the way, if you have questions about the technical stuff here and some risk management or whatever regarding to this, let me know. I'd be happy to answer. I know that today I'm a little bit more technical. Actually, I haven't even went into the topic that I wanted to talk about. MSG UFO. Hey, good to see you. Options diary. You're desperate. Don't be that desperate. Okay. So, but actually, this is a good example that we're seeing this consolidation. Hey, Max, thank you. If we're seeing this consolidation, you have to have a plan how to get out from the chop. Okay. Obviously, as time goes by throughout the session or throughout the day. Hey, Kevin, good to see you. So obviously, as time goes by, and you see the chop happening, especially on the lower time frames, you got to have an exit plan. And I think that's somewhat interesting to, maybe we can add this to yesterday's topic as a little bit of an extra. So you got to have your exit plan. There's nothing wrong with the chops. Yesterday we talked about this. If we see this, you know that you're in the waiting room. Hey, Trader H, good to see you. Is this the Rocket Scooter fam already? Rocket Scooter fam. Sorry. So if you're in the waiting room in this chop, then you definitely have to put up an exit plan or exit strategy. The exit strategy, if it lines up with your target, which could be that previous day high has to be taken out, then here's an exit plan. What is that level that you're looking to get out at? What is that swing high or low that you're looking to break? I have to announce the bounty. I didn't know about any bounty. Gustavo, thank you. So please change the color on the chart. It's giving me nightmare. I can't do that. Thunderbird, the thing is, I'm not colorblind, but I'm mixing up the colors. And there's a study, by the way, true story. There's a study, I think I told this yesterday or last week, yesterday, I think, about the red and green candles. They made a study. Red and green candles are basically giving more anxiety and more stress to the trading, to the day trading. They did this, like, I don't know how many traders they were testing, but basically it has been proven officially that you should not be using red and green candles, because it's basically, especially the red candles, are increasing the stress levels in day trading. The other thing is that I'm not colorblind, but I'm mixing the red colors, not all the red colors, but some aspects, some shades of red and green, which are getting close to each other. I'm sometimes are definitely mixing it up. Obviously, I see which one is the red and the green candle, and don't worry, I still have a driver's license. But I just found that it's better to go with something absolutely different colors. So that's why I'm using it. Anyway, it's an official study White and black is good too. But it's an official study. Yes, there's a white and black charts and the green and red charts. And it has been proven that the red candles are giving much more stress to day trading. Just saying. Okay. So the afternoon trap, I wanted to say that. And so first of all, if you have an exit strategy of the chop, that's good to go, right? Oh, I see there's a vote already. All right. So if you have the strategy, then that's good. That's the way to sit out the chop. And it's even better if you have your exit strategy based on the 5-minute, maybe even 15-minute. Like obviously the 1 minute can still give you some fair value gaps, some possible breaks, which could be false breakouts. The good thing in this one is that there were no major breakouts. There was only one breakout here that could have lured some traders into a sell trap, which was right here. There was a down close candle on this 1 minute swing low. There was a market structure shift down here. And there was a fair value gap here. In different circumstances, I would have maybe taken a short here, but my target would have been maybe the first fair value gap or even lower. So there was a possibility to get out from the chop here, but it's still better than just pushing the buy and the sell button like on every swing high and swing low without even having a certain exit strategy. So this strategy, the exit from the chop, obviously failed. If the next exit strategy is up here at this market structure shift, then it seems like we're just breaking out from this. But there was no pullback on this one. There was a fair value gap here. Maybe if you want to be super aggressive, then here's a possible entry right here. If you are super aggressive to go for that previous day high, as I said, the afternoon can still go there. If you have a strong conviction about that, I think this would be the first sign that the market really wants to take it to that level. But otherwise, I'm not going to jump in. So this one failed here. And this is basically how you can read the chop. If you have certain entry rules, certain check marks and criteria of how you want to get out from a chop session here, I would say look for up close and down close candles above or below certain level, especially in that chop, right? So having a wick is not enough, especially if the market is chopping. I know I just steered the topic into the chop session again, but I think it's just important to understand. Yesterday, I forgot to talk about this. If you want to get out from the chop, and if you're looking for a certain direction, forget about the wicks. You definitely need down close or up close candles breaking certain level, okay? Ups and downs. This here was a false exit. This was a fake exit to get out from the chop. Obviously, it went back down. Maybe there was some good targets here. Technically, there was a zone at 74, but I'm right now I'm just talking about the 1 minute chart. So obviously the 1 minute chart is not something that we always need to see, watch or observe, especially at a chop session. But this was a false exit. Okay. Oh, sorry. This was a false exit here. And now the market wants to go to the other way. Now, is this going to be a false exit again? I don't know. This is why the only thing we can do is basically an educated guess. And if it lines up with that level, with that specific level that you're looking for, then go for it. So if you enter here, even if you're enter late, and if you're looking for a previous day high at 613, go with the 1-to-1 risk to reward ratio. Boom. You can still go for it. And if it goes back into the chop, you still don't have to close down the trade because that's the key to it. If it fails to go higher and just goes back into the chop, you're still good because you predetermined your risk. So once you predetermine that risk, you're not going to change your strategy. Okay? Only when it wants to break out again on the downside, but that's why I put my stop loss here. Okay, if it breaks down, if it breaks this, what's this level? 493, then obviously you can have a plan to go short if you have a level like that 416. But until this level is going to hold, until your stop loss is going to hold, then this is exactly the kind of trading style that is going to prevent you from doing over trading, from doing like not just over trading, oversizing a position because you just want to see it go back into the chop. So yes, there was a loss here if you were looking to go lower. And if this trade, I mean, this is not official trade. This is not something I called out officially or something. I'm just saying that this is an example. If this example would fail and it just goes down, that's 2 losses in a row. Assuming that you haven't taken a trade before because you're doing your 9 to 5 job or your main business, whatever. If your first trade was this could be your second trade of the day. If it fails to go up there to the previous day high, that's going to be your second loss. And the good thing in this, if you have a loss on this trade as well, you can still reflect on yourself. Hey, that boy, what's up? My usual risk to reward is 1-to-1. Sometimes I try to go for 1-to-2. I try to, but usually I end up at 1-to-1 or maybe 1.5. As I was saying, this is a winning trade. This here, even though it's lost, it's a winner. Why? If this is your strategy or it's part of your strategy, what did you do here? Basically, you utilized that there was a gap here somewhere. Oh yeah, here. You utilized this fair value gap there to take a short. It failed. It didn't really go. I mean, you were in profit. So basically, if it moves down, what was the distance here? We just went down like 20 points. If you're managing risk differently, like the way I do the risk management is I try to leave the trade on as long as it's possible. I'm not trying not to mess with the stop loss. In this case, if you're managing your risk like it's almost down there at the first presentation gap, you can still put your stop to break even and survive this. But whatever you do in terms of risk management, your entry was good. You followed the plan. You followed your exit strategy from the chop. And even though the market reversed and took you out, this is a winner. And that's what I was talking about last week, the scorecard thing, if you guys remember. That's how you can turn your mindset around. Like, oh yeah, I got taken out and now my account is in a bit of a drawdown here, but it's still fine because I played by my, I traded by my plan, the game plan. That's what I did. And so the second trade is obviously because you have to hold this trade. You cannot say because there's a huge chop session to the left here. So because it's a huge chop fest to the left, there's not going to be a scenario like, okay, let's just break the 529 and we go back. No, that's just too much risk, in my opinion. If you are looking for a market structure shift inside of this chop fest, that is going to be a low probability. I'm not saying it cannot happen, but sticking with your trade and with your setup can definitely prevent you from over trading. And if this is going to be your second trade, and if this is going to be a losing trade, you can still reflect at the end of the day like, okay, we did good. I followed my plan. The market didn't really go where I anticipated that it would go, but I tried. I followed my plan. And this is how you manage risk. Okay. Why is your risk reward so big? That would be quite a lot of drawdown. Not necessarily D, but good question. So the risk to reward ratio here is 1.03. So basically 1-to-1. Now, sometimes I use this very handy tool here. TradingView has this long or short position tool. I do like TradingView for charting, but we have this tool. It's called long position or short position. You can type in your account size. you can type in how much risk you want to take on your stop. So basically, I put a long position tool here. I predetermined my stop loss here at 493. So it's going to tell you that the quantity here is 0.8. Obviously, we cannot put on. If I want to risk $100 of risk on this move, I should put on 0.8 micro, which is not possible. We all know that. But you can go with 1 micro. So this is going to tell you that your risk is going to be still good. You're not technically risking too much more than $100 with this trade. So I don't really care if the trade goes into a drawdown. The risk to reward ratio is still 1-to-1. So here's a possible scenario. I'm not saying that is going to happen, but let's say it goes down to a drawdown like this. It happened to me many times. It goes through a drawdown, PM session starts, and look at, and this scenario happens. This happened to me many times. And this is why the 1-to-1 risk to reward ratio, especially if you're trying to get out from a chop, can work out quite nicely. I'm just saying that this here, predetermining your risk, setting up your levels, having that exit strategy, the game plan, is definitely going to help you to fight against overtrading and oversizing. So this is basically partially risk management that I'm showing here. And we're actually at the second trade. So I was not forcing anything. I was not trying to force myself into anything in between these levels. So the market, so basically if I had my previous stop here, somewhere around 525, oh, there was some winners. Let's go. Me. You guys, everyone wants to win. So all I'm just saying, oh my God, everybody went nuts. Cool. We like that. Abhishek is definitely turning everything. Nice. W's in the chat. No problem. You don't have to be sorry. I'm with you guys on this. Let's go for the free stuff. I do love the free stuff too. Abhishek is playing God right now. So I'm just saying that this technique, just to finish up my thought process until you guys are celebrating, to finish up this thought process, I'm just saying that this approach is going to prevent you from overtrading. You're going to wait for the entries for the plan. Put on glasses. I have to put on glasses. I have to be ready for Matt. I know he's somewhere around here, so I have to be ready for him by the time he gets here. I have to look cool. So, and again, let me finish up this thought process. So, basically, this is going to prevent you from overtrading. And this is your exit strategy from a chop. And I'm actually glad that I could show you guys this because if you define how to get out from a sideways market the way like this, it's actually good. Only works when you have specific levels that you can go to. Like obviously go for yesterday we talked about the important levels, right? Specific levels that you need to go to. It can be supply, demand, support, resistance, whatever, fair value gap, pivot levels, whatever that you like to go to. Amen. Yes. Yo, yeah, these glasses are definitely something. Yeah, I know it's a little bit too bright here for me. I gotta be prepared. So actually I steered away from the previous topic. I actually went back to yesterday's topic, but I really forgot to give you some examples how to get out from a specific chop market, right? So if you have any questions regarding this or risk management or anything else as a closing sentence or whatever until Matt comes around, let me know. And obviously, the sabotage, yes. Obviously, stick around for the next session as well with Matt. Lots of values as always. So I'm just gonna take this. I can't read. What you feel now, like what mistakes you would have avoided if you know. Pick me as a winner. What you feel now, like what mistakes you would have avoided if you know before. And yeah, pick you as a winner. What mistakes? There's so many mistakes that I would have avoided. One major mistake, which I, should have avoided like at least 2 years before now, is not trading the minis. Trading with the micros. Definitely. I started out to trade with 1 mini, 2 mini, on 50K accounts when I started the futures. And obviously, when I was trading with CFD prop firms, I was like trading with standard lots as well, and definitely size down. That was one of the major things that I should have done early. So that should have happened. But by the time I realized it, at least I had enough chart time to know what I have to look for. And now I know that sizing down my positions and going with small steps definitely helped out. What's happening? Everybody is going totally. Oh, I see that. Everybody wants to. Who is the winner? I don't know. Abhishek is the one who is picking the winner, it seems like. Let's go. Yeah, he's the boss now. It seems like he's the one. You guys have to be really good with Abhishek in good terms. Yeah. So this is the only thing here. Oh, I told you guys. I'm sorry, the shades. The man. Look at him. Oh my God. He came prepared. He is. Sing it, everybody, super loud.
I got my MyFunded shirt on today. I actually came ultra prepared. I came all prepared with this real money. This is 100% real fake money from Amazon.
Guys, real fake money.
Real fake money. It's real fake money. It's not the fake money. It's the real fake money.
It's the real fake money.
The best kind. It's Hollywood level. I mean, this could pass in a movie as a real bill.
I can only imagine that Matt has all these movie preps in his trading room or whatever. Who knows what else he has over there? I don't know.
It's starting to get a little crazy because I'm running out of room on the desk as the props. The newest prop added to the mix is this cough drop. This has become a meme on the show as this conversation about this cough drop, after an hour of talking, kind of devolved into this long-winded conversation about us living in a simulation. It all started from this cough drop, and we were debating quantum physics and stuff. It was insanely crazy.
I do love when a trading session goes into quantum physics. Yeah, I love that.
Yeah, sometimes you get bored when the market's doing nothing, and you got to do something to fill the void.
Definitely, when there's nothing else to do, we can also do like a singing contest. I told you with the Backstreet Boys stuff and all that such, but yeah, quantum physics also a thing. Yeah. Anyway, what's happening?
How's your trading day going?
Trading day so far for me, a bit of an upside down, somewhere around break even. This open was definitely, I would just call it liquidity hunt up and down. So it definitely tricked me. But otherwise, I have really no idea where this one wants to go. So nothing. I have no idea. But it is what it is. We have these days. How about you?
I've been rotating accounts the last 2 days, pretty solid. I think I'm up like 8K today, and again, I was basically playing the long side. I didn't ever put a lot of risk. I traded maybe 2 to 3 accounts at a time, and I just basically took a couple long scalps. I think I did most of it there. in there. And then 2 of my trades I traded overnight on that big crazy dip. We fell to my little monthly hedge pressure level. I was actually drinking at a bar with some friends playing pub trivia, and I happened to open my phone at that time. And I was looking at this, and my Discord, everybody was like, hedge pressure. And I was like, okay, I'm just gonna just buy in like 2 accounts, and I longed really quick, and that got out right there. So slightly drunk trading, but it was worth it.
Hey, you know, as long as it makes money, who cares, right?
Yeah. But it's been
Cool.
it's been a really, like, this choppiness has just been insufferable, dude. I know it's like, for a lot of people, you know, especially breakout traders, you know, you're looking for signals for breakout, and the market is not breaking out. It's like you almost have to blindly long at a dip or blindly short at a high and sort of just bet on a tight, choppy range. Breakouts have been really unforgiving. Yeah.
Exactly. I was like saying almost the same. Like if we have this chop sessions, like the move is done by 11 or whatever by the morning, and after that we see all these chop sessions happening. Like if you really have a higher level of I mean, a level that you think that the market goes to, you can just, if you really want to push the button, just push the button blindly, but with a low risk, and just go for it and see how it goes.
That's basically how I survive choppiness. It's, you know, you go for one contract at a time and maybe one account if you have a bunch of them, and just when it dips, grab one in one account. When it dips again, grab another in another account, and just play that middle range. I mean, all of this today was just small base hits here and there, and it's slowly added up. Some of my accounts are red; they didn't make it. Right, you can see some of them are red. Some of them haven't even touched yet. Spreading out risk in choppy days is the easiest way to get past them, because you're not gonna be able to predict this direction at all, even if there is a direction, right? So,
exactly. Yeah. So that's why I was also like talking about exit strategies from the chop, like what we can do. But obviously, as you said, if you have a major level that you're looking for, and if you really want to go for it, just go for it. And obviously it will be a small position, but at the end of the day, it will work or not. But at least you're not going to overtrade and not going to push the button more than it should.
100%. Chat. Who here, hold on, tons for you, Tom. Who here is in the Rocket Scooter stream, by the way? What do you see next to Tom's left arm back there in the background? What do you see in his room?
That's a vent.
No. What? This is a fan, guys. Tom has been hiding the secret whoosh fan for the longest time. Literally, Tom is the OG whoosh fan.
I am.
This is by far the biggest rock. We have songs about the whoosh fan. It is. I literally draw that on my screen almost every single. I drew it today.
Now we have to do a song about it. My gosh.
Yeah, no, it's insane. I think I drew, and today it devolved into the word woogle. This is what I drew on my screen today. It's a weird meme we do whenever the market's going up. We literally draw that fan, and today we decided to make it bigger. And I said, "What's bigger than a Google?" So I made it woogle. Again, this is real trading, guys. I promise.
Yeah, so that's the proof.
It's insane. So Tom is like the OG originator of the whoosh fan. When we want the market to move, we whoosh.
Man, I have to go down deeper into this concept, but I do like it. So maybe next time I'm just gonna pull it.
I would avoid it at all costs. This is your will completely turn your brain into mush.
Okay, I will. Oh, that's cool. That's cool. All right, everybody.
The original.
This was an awesome session. I just want to say that it's good to know. Actually, I'm going to study this one next time. So,
I think we should give Tom like a whoosh fan variation for his theme song. That'd be kind of cool.
Oh my god!
It's it becomes a whole thing. But yeah, excellent.
All right, Chad.
Awesome, bud. See you later, dude.
This was really good. Thank you so much, everybody. Have an awesome session with Matt. Listen to him. Lots of values. And Matt, this was great. It was good seeing you, and see you tomorrow as well.
Have a great afternoon. Right. Awesome.
Thanks, everyone. Cheers.
Excellent. All right, guys. Welcome to the show. Everybody say goodbye to Tom. All you need is a whoosh. Whoosh fan is kind of a funny thing. A long time ago, I was teaching a lesson about what hedge pressure does. And I was talking about hedge pressure is like this gentle sort of wind that blows the market in a direction. Hedging, right? Hedge pressure is a way to look for if dealers have sold options, they have exposure. You sell a call, right? And the call goes in the money. You're going to have to buy the shares because the person that bought the call is likely going to buy the shares from you or take the shares from you. And so whenever you don't have the shares, you have to acquire them. And if the market's continuing to go up, you're going to have to buy those shares even at a higher price to distribute them, right, to the assigned trader. So the idea is that in hedging, right, somebody sells calls. If calls go slightly closer into the money, people who sold them will buy the market. And if you add up all the pressures of all the calls and puts, you can create a flow path with like a gentle wind. You can say at this particular level is the balancing point where there's more longs than shorting due to that one effect. And that's what hedge pressure actually is. We isolate dealers from all the options. We have our algorithm is really good at doing that. And then we can calculate their maximum gamma exposure, which is basically the maximum order flow due to hedging, maximum change in delta. So hedge pressure, where I longed last night, was worth $4,000, just that single pivot. I was drinking at a bar and we were playing trivia. And right when it fell, I looked on it and took the long there. Pretty simple pivot. I take it all the time. I trade it every time. It's one of my highest probable pivots. And again, all that it means here is that at this particular junction, anywhere above this line, you're going to have more longing than shorting just to balance out all the options risk of the dealers. And here is more shorting than longing. It's like a polarity flip. So if you press down here, the shorts start to take over and it can speed up and start to crash out. So what I always do is I bet on a reversal point. Every single time you hit this pivot, I just go the other direction every time. If we approach it from the bottom, I short against it. I bet that the market is not getting the power to overturn the entire structure of options in Wall Street, basically. And that's basically how I do it. Yep. So inside of that, this is basically how hedge pressure works. Yeah. Anyways, I gave a story and I was saying, hedge pressure is like a gentle wind that as you're sort of just hanging on to the market, there's just sort of like this kind of like gentle upward drift. You can kind of see all night, the market's kind of had this sort of gentle upward drift. NASDAQ 460 to 520. It's kind of moved about 40 points and sort of caught the wind again. And I used to draw it when I would teach the lesson. I would say, it's kind of like a little fan that's kind of blowing, one of those little room fans that oscillates and it makes a little, and I would draw this and I'd say the word, and I'd like little whoosh, a little gentle whoosh that would sort of like catch the market and sort of pick it up going higher. And all of a sudden the whoosh fan became like a thing. I would draw, people ask me, draw the fan on the screen when we want the market to go up. And on occasion we'll draw one pointing down, but it's just a fun thing that we do to kind of like assist the visuals and make everybody laugh while we're sitting here waiting in a flat market doing nothing. So, yeah, so you guys in chat are fired up about something, maybe a giveaway or something that's going on. But yeah, so I'm Matt. This is Lunch Money with Matt. Thank you for joining onto the stream. MyFundedFutures having this really killer giveaway. You go to MFFU.com/billion. You'll be able to enter into a drawing for 20,000 core accounts. They're giving away 20,000 50K core accounts. They're calling it their billion sale thing. And the billion sale means they're giving a billion total of SIM funded accounts. Sorry, SIM accounts, eval accounts, whatever. 50,000 accounts times 20,000 for $1. If you get your name gets drawn, you get $1, right? Obviously, there's not 20,000 people that watch the stream every day. So probability is extremely high that almost all of you should probably maybe win, which is kind of cool. So make sure you enter. It only costs $1 to draw your name. Abby's throwing up the link in there. It's $1 core count giveaway for 20,000 traders. The average 10,000 people that watch the show every day, odds are pretty darn good that most of the people out there don't even know this is happening. So you make sure you go enter and sign up. You're probably going to win. It's a random drawing, and if you win, you win. Nice trend line today. For she would be proud, huh? Yeah. But yeah, make sure you guys do that. And that's pretty cool, right? It gives you a chance to check out the core program, which is pretty nice. But yeah, so today I'm up about 8K. I've had a really stellar month. This has been a really solid trading month. Actually, the last 3 or 4 months have been stellar. Since you guys have known me on MyFunded TV, it's been kind of like my best couple of months. I've been sort of crushing it across the board. I've been bullish almost every single day. I've rarely, if ever, pushed a short button. Yesterday is the first time I pushed a short button in probably months for one trade, and it did very well. I told you guys about that, my pre-market trade yesterday. And I don't usually trade overnight, but there's some opportunities and I take them. I'll take them. And today is pretty decent. I've been kind of just scalping a little bit. taking some 1 to 2 contract trades, playing tiny bets, liquidity pockets, one of my favorite setups. We also have a song for this. We have a song for everything. We call this every single time trade. The probability is extremely high. Pivoting from here to there, it's more likely to go here before it goes 10 points the other or 1 strike distance the other way. Nasdaq is a 40 point stop. S&P is a 10 point stop. So even if I would have long today and held all day, I would have never triggered a stop on the break point. Here to here was a solid trade. I actually did take profit on a little bit here on a couple of the accounts. I just scalped again. Pretty much it. The opening trade also as well, I longed at the open, and I think I longed and took some profit. I did. I longed and filled the gap. I took some profit in one account. Then I longed again, took profit in another account. Then I longed again and stopped out on 2, which is why 2 of them are red. And then one of the red ones I worked back up to green, almost green. It's like $13 in the hole. And then the other one is still red. So I have 4 accounts I can still play with. The other ones are pretty much maybe done. Maybe the 750 I can keep working on a little bit. I try to make about 1,000 each one of these, maybe 1,500 in some of these, 1,800 in some of these. And yeah, just working through it. And so today I'm waiting for, I don't really think we'll get a big long breakout today from here. I think the market is solid. At least it's not going to probably sell off. I think shorts are going to be a little unhappy today. But I'll be willing to take this trade one more time, maybe. With now all indicators are looking good. All my resiliences are positive. Ratio is bullish. I mean, everything's good today. Monthly maps bullish. Everything bullish. Rockstar tools across the board bullish. Is long and out the door. No shorting. It's been pretty solid. Yes, sir. What are you guys talking about in chat? Y'all are guys talking about the chat and the giveaway still? Excellent, excellent, excellent. Excellent. All right, let me load this up again. All right. Hold on. Let me reload this up here. All right. Let me go here. So rest of the day today, I think is going to be a little bit of a toss up. We did have the consumer confidence numbers go out this morning, which is a little bit better than what I expected. I thought they would come out a little poorer than expected because the numbers lately have been showing higher inflation, PPI is going up. CPI hasn't reflected it yet. So maybe the consumer confidence, whoever they poll with this, hasn't really shown any evidence of that. But we remember back when we had, April, March, February, consumer confidence tanked really heavily when we started getting the announcements of the tariffs before, the April turnaround. And so the idea that we came in on a beat on the forecast at 96, 96, and we came in right about 97, whatever it ended up being. Well, let me see. Yeah, once we came in at 97, it's actually a little strange to have a little bit of an improvement on these consumer confidence numbers. Almost like, people aren't affected by the tariffs. So we know CPI has got a delayed action. So we're not seeing a lot of, consumer spending issues. As i.e., this is implying that the tariffs aren't necessarily hitting your pocketbook too badly, like they did, like inflation hit your pocketbook back in 2020, right? We had that number was loaded due to COVID. Then we had sort of kind of pulling back, I would say, in 2022 when the market had that little recession that year, pulling down below 100. And now below 100 is not good. Anything above 100 is really good. And we want to see that number, at least increasing. Now, just think in general, good is relative. You want to see it increasing. In a bull market, you want to see it getting better. We've seen it declining ever since we've had post-COVID high inflation. It's just been in perpetual decline ever since. And this is relative to the tariffs, but even seeing it go up, I think is still riding that hopium from April. I think that we're still sort of like in a bit of a downtrend, at least a little bit. I don't think we crush below 80, but I think high to low 90s is where we're going to be pushing over the next couple of months. I think that going to 98, 93, 92 has to do with the ideas that, tariffs were paused for a little bit, and then now they're back on, and we start seeing the full effect of them pretty soon. We should see low 90s again. But at least today, the market didn't get really a big jolt off of that. And when the numbers came out, we didn't really do anything. And I think it was about right here at 9 o'clock or something. Maybe it was here. The market basically popped her one candle and fell back like it didn't even care. So maybe it's not that big of a deal right now, but I think in the idea that market be sensitive to some catalysts and some events, it might actually move a little bit faster. Subsequent news, right? It comes out later on down the year as the year comes through. How are you guys doing today? Let's see your P&Ls. I want to see how you guys did. Y'all long? Y'all short? I want to know what you guys did. I want to have a poll of what traders have done today. Let me know if you guys made money, lost money, how'd it go? What was your plan? What was your strategy? I'm curious. 4K today? Yeah, I want you guys whip out that P&L. Let's see it. You were long gold? Okay. You blew 5 accounts. That happens. Don't get discouraged. Getting paid tonight. There you go. I like hearing people in the stream making money. That's good. Your P&L is not that big. It's so cold. I was in the pool. Won 1.3K on that long. Nice. Down 250. Do you have a thought for a crash like 2008 happening again? Not really possible anymore. We already had 2 crashes since 2020. The market crashed in COVID. The market crashed in April. So when you start triggering circuit breakers, right, or getting close to them, that's when markets are crashing. We've sort of wiped, the liquidity twice, and those are like too many crashes. And that was enough, I think, to ward off a big crash. 2008 was like a bigger deal because you had the housing market collapsing based off of a really strong fundamental reason. And then you had a secondary wave, which was the banks that were exposed to that also crashing. So real estate market crashed, housing market crashed, all that stuff. And then banks collapsed underneath it. So that was a different reason for crashing. They call it the long-term debt cycle, where some bigger, larger fundamental, more catastrophic bubble popping can cause a bigger collapse. There's really no bubbles right now that could topple the entire global ecosystem, and banking infrastructure is pretty much not super exposed to one industry to that degree that that could possibly happen again in our lifetime. Anything could happen. Stupidity can always find its way back into stupidity, and greed can always find its way back into Wall Street and start to, gloss over people's eyes to like the glaring toxic investment that they don't care. They're riding the wave as long as it's there. I thought when I heard crypto was becoming a thing, and I was like, oh man, crypto could be the next housing bubble where everybody's got to get in on it. And then government rug pulls and it collapses the banking infrastructure. I was always worried about that, but it seems these days it's more of a diversified asset that people aren't going all in on really in the banking world. So I was the one time I was kind of worried was when crypto became tradable to a degree, and like Bitcoin futures were out there, and then they started listing them on US exchanges. I was thinking like, imagine investment banks going super long in this stuff, and the government's like, all right, no, that's illegal now. Sorry. And then we enter a Great Depression again, and it's not going to happen. That was the one thing I thought we'd be exposed to. So other than that, yeah, except for Saylor, right? Yeah, that guy's all in on Bitcoin. This guy's kind of loony, man. He's kind of a nut. Listen to him talk. He's a little cuckoo in the head, I feel like. But but again, maybe the most brilliant minds in the world always seem a little cuckoo up front. So we'll see. But I don't think we're in for any kind of market crash. Recession, when we already kind of left one too, right? We had 2 crashes and sort of recession in the middle. I think the market is probably stable and bullish for a while. Once we muscle through the tariffs and start to get through that and prove that it's not really that big of a deal, I really don't think that we are falling lower. And even if there is any kind of selling, right, we've set ourselves a pretty solid base around this 22,000 level. If we break through this, then the market's going to capsize again. But I really don't think that's possible. I really do think that we are sort of like stable right about this 22,000 level. And again, if we chop through this and we hold and we continue to move up, I think that the market's going to accelerate, to be honest. I'm in that camp of people. I really think once we get through this, we might get another 6 months of just straight up rallying. As long as things are stable. Remember, Powell is saying they're going to cut rates a couple times probably this year, or hinting at it. And the idea that tariffs, inflation is going to be short-lived, according to Powell, Wall Street may not see any danger here. I mean, consumer confidence is still pretty decently high. So, are the numbers really saying that economies will slow down due to inflation? The signs are pointing at it, but nobody's seeing it yet to a degree that it's going to start crashing markets. So I think we're all right. I'm still bullish, baby, every day. Yep. All this chat flooding right now. I feel like I'm a gaming streamer on Twitch. I can't even read it. It's scrolling so fast. What are you guys talking about? Me, Abby. What's Abby throwing you guys? Y'all having a giveaway or something? See, I'm not even paying attention to this. I feel like I'm streaming Fortnite over here. Looks like he's doing a giveaway. All right. You like the MFFU merch? Check it out. I actually dig it. Like they send me this shirt. I wear it maybe like once a week. I throw it in the rotation. It's one of my only like non V-neck t-shirts that I wear on the stream. I actually have to say, I don't know if they have a merch shop, but this is like company merch. So they sent it to me, I guess, on that premise. But it is a high quality t-shirt. I'm not going to lie. I think that MyFundedFutures did a pretty spectacular job. A shirt giveaway. I like a whole bunch of them. They're like really nice. I like sturdy t-shirts. Actually pretty nice. And I buy that t-shirt off of me. Do you want me to wash it before I send it? Or do you want me to send it the way that it is? That way it smells like my cologne. I should charge more for that. Kind of read what you guys are saying. A Warren Trader jersey. Let's go. You love a t-shirt and promote me every day at the gym? Hell yeah. You know what I'll do? I've been people saying like to make Rocket Scooter merch. I've always been thinking about it, but I would do really nice like corporate level merch. I wouldn't do like cheap flimsy t-shirts and coffee cups or whatever. I would go to like somebody that does merch for oil and gas companies at like OTC conference or something. Like when you go there and it's like high quality corporate merch. So I'm going to find some corporate merch shop. It might be expensive as crap, but whatever. Quality for everything, right? If I sell a Rocket Scooter shirt, I'll buy a dozen. All right. Well, think about it. IDOC and I were kind of looking the other day at corporate merch printers and stuff. All right, cool. I will make some merch. What would you guys like to have if I were to make some kind of merch? What's the kind of plan? Short sleeve t-shirts, long sleeve t-shirts, V-neck shirts, coffee cups. That's always a thing. People like coffee cups, hoodies, glasses with my logo. Oh, that can be arranged. Dry fit moisture wicking. Dang, you guys are picky. Long sleeve t-shirt. That way you guys can work out in it. Mow the grass in it. Do cartwheels in it. You want to share it with a rocket scooter going to the moon? Boxer briefs with the rocket you know where. Oh yeah. That's right. You let her know that your portfolio is going places. Rocket scooter nipple tassels. I'm wearing them right now. They're so comfortable. They give me the flexibility and mobility that I need to do my job. It's perfect. All right. So now we're going to watch the rest of the market day. and just see what's going on. I think I've exhausted most of the long trades I can do. This is pretty simple scalp setups. These are some gap fill trades. We did open flat in the market. Not all the stocks are bearish. Most of them are bullish with room to fall. Market bottomed out, sort of key levels. Nasdaq has got a little bit of, movement inside of here. And S&P hasn't had like any sort of good signal. The S&P has been, inside of this range. When we open flat, I usually don't take long breakout trades. In this kind of environment where the VIX is above contango midpoint, we always tell this is choppy. And you can always tell it's choppy to start off. So the S&P has A+ setups here and here. I was kind of waiting this morning, hoping that it would fall, but I had to sort of chase these small scalps on the upside. Today, if we fall to 64.40 and 64.28, the similar area, or 38 and 28, these are key support levels to buy it. I mean, everything looks pretty solid. And, I've got this move and I've got that move. I think I've got the most of today's move down. And I don't ever necessarily have to try to overtrade, right? Because if you are always trying to find a move, you're going to be more upset than anything, always trying to be in the market. I'm so comfortable waiting. I've learned as a trader, there's nothing, test your patience to sit out and wait for something good, right? You always have that itch like, man, I'm missing out on something. I'm going to miss out on the next big thing. But I'll tell you, when you start doing well at trading, you start to love doing nothing because you start to remember all the times you overtraded. And the more that you're in the market doing something, the more that you're going to lose. The market and house, everyone has an advantage over you. The more you do, the worse you do. Trading is one of those things where it's like the less you do, the farther you go. That's one of my favorite sayings. So the less you do, the farther you go. And I'm going to tell you, there's nothing unsexy about like staring at my bank account every day. I look at it and I'm so happy that I had to do very little to get it. This is where I convinced myself to do little. I always say, man, I didn't do much. And I did, wow, like that's what these trades were like all less than half an hour long, 20 minutes, probably a pop. And I'm not always doing something, right? And it might, like in the action, the heat of the moment, you're like, man, I need to be doing something because I'm missing out. But then when you kind of like say trade places with me, at the end of the day, I never tell myself I'm missing out on anything. I look on my screen, it doesn't look like I missed out on much, right? I'm never in a hurry to make a trade. I'm very calculated. I hit what I want. I get in quick. I get out quicker if I can. I teach you guys, so like, especially at lunchtime. A lot of the times, you'll very rarely see me with awesome opportunities at lunch. Market almost never at lunchtime gives you a really quick, awesome trade. Most of your trading will take place before European markets close and closer to the end of the day. Lunchtime is usually kind of a boring, low volume, jolt around. So a lot of the times when you guys are here, you're like, what is this guy doing? Is he even trading? Start to understand that like actively not putting money on the table is actually a trade as well. When you choose to trade no money or trade $0, you're actually choosing to trade, but you're in a trade of zero. It's an active choice. It's not omission. It's sort of like choosing to do nothing. It's a powerful choice because I'm in a trade of nothing most of the day. And I'm comfortably staring at the market in my trade of nothing, acting like I'm in a trade of nothing. I don't sit here and say, well, I don't do anything. I'm bored. We may sing songs and goof off to have fun, but I'm actually like focused on a nothing trade. Like right now, I'm focused on nothing. I'm actively managing my position of nothing. I'm actually have a stop and a profit target of nothing. Nothing. Those blanks are not filled in my brain. So I'm comfortable being in a nothing trade, just like I'm comfortable being in another trade. You guys sometimes are like, I got to make a decision. Let me long. And I'm in the trade finally. And then you're like, okay, I got to maybe hope it goes somewhere. And then you're committed to the heart attack of it going up and down. But you're like so relieved when you finally choose a direction. You feel like the pressure's off, right? Start to do it the other way around. Like I feel like the pressure's off by not doing something. I'm like, okay, whew, I'm in a trade of nothing. Whew, pressure's off. I entered a trade of nothing. I got rid of the itch. No longer scratch that itch. Does this make sense to you guys? Like learn that. When you are anticipating you need to do something and you push a button just to relieve yourself. Okay, fine, I'm in the trade. I made a decision. Let's see where it goes. Pretend like you're doing the same thing. Make the decision. Aha, I pushed the button. I longed 0. And now I'm waiting. Whew, pressure's off. It's a good mental game to like throw yourself into that mindset to kind of train yourself that it's okay to like trade 0. Yeah. So anyways, that's a lesson for the day. So now I'm just going to wait the market just stick around and do nothing. How to use the order book? I don't really use the order book at all. I feel like the order book is sort of an impossible to comprehend source of data. The movement is so quick. The market makers padding the book are all over the place. It's almost hard to make sense of the flickering numbers in the order book for me personally to find it useful. I'm sure there are people that have a whole trading philosophy around using the order book. There's a lot of software that kind of like aggregates the orders and against the bid and ask to sort of like create, like support and resistance from order book stuff, but it has to be software assisted. So it's too much information to manually process. I never look at the order book and say, ooh, there's 1,000 contract order there. Maybe that's support. I've learned never to believe anything you see in the order book. However, orders to the bid and orders to the ask, I've heard from some people that use that can tell you a lot. They use tools like Bookmap and stuff, I think, to read that sort of impression that the order flow leaves on the market against, like, if you're attacking the ask and attacking the ask and attacking the ask, you can see that the market's pressuring to the buy side. And so you can kind of sense that sensibility, but you have to see the orders with the order book together, I think, to make it usable. That's the way I've always believed it. But you guys, if you guys use order book, let me know how y'all use it. In my experience of ever trying to make sense of it, just as the more liquid the market's gotten, the more traders that have entered the picture, the more these numbers just flicker around. It just seems noisy to me, and it's really hard for me to make sense of it. So essentially, all software assisted, and you got to kind of find some kind of use of that. Yeah. What I think will happen by end of the day? That's a good question. I think that the market is not showing strong signs of bullishness. I think that the market is still bullish, but it's not showing strong bullishness. It's just showing support bullishness. So right now, all of my indicators are good. Everything is confluenced to the bull side. So what it tells me is that the market is very likely to close above here. And also with the statistics of opening bearish, it's more likely to close here. So the most likely candidate of market close is an internal day to today. As long as the indicators stay put, we should be here. Smaller chance we do break out and go here. Only about maybe 10% of days will leave the zone and go to a different zone. So it's a smaller probability that we do break out and go here. And also a smaller probability that we leave bear zone and go to bull zone. So it's, essentially we say that about 90% of days are going to kind of stay inside of about here. So that's kind of my thought for the day, is that we end up inside of this range, which is why I'm only taking scalps through it instead of trading that is going to break out away from it. Yeah, that's what I'm looking for. Okay. I'm reading chat. Don't know if you're reading this, but I've been applying my bootcamp lessons in real time and seeing the market differently. There's drastic improvement to your trading. Thank you. Oh, well, Raphael, I'm very excited. What have you done, at least from the topics in the bootcamp? What would you say has been your, and those of you that are also in the same boat as Raphael, if you guys come to the bootcamp and have learned something, that's amazing. I'm so glad to hear that. Like, what have been the topics that have been the most useful to you in your application as far as your own trading? What have you actually done differently in your own trading that has made the drastic improvement? I love hearing drastic improvement. That's awesome. Not just improvement, but noticeable, right? Like drastic. Like, what's been the biggest change that you think? I'd like to hear it. All right, let's see. Somebody says sizing down in patience. Good. Patience, trading less, not shorting as much, sizing down. You guys like stop shorting in bull markets? Yeah. If I could say that this is the most important lesson I've ever given people, is that I said not most important, well, an important lesson. One of the most, I would say, one of the easiest things that a trader can switch overnight and see a possible, and I can't promise you anything. Remember, there's no promises in trading. So take this with a grain of salt, but there's something you can do. There's two things you can do actually that overnight you can make a difference tomorrow, like a single choice. And I can tell you, one of them you're going to hate, one of them you're going to like. Well, maybe you'll hate both of them. I don't know. Number one, when I give you my magic VIX number once a month, contango midpoint, if you avoid trading on a day where VIX is above this level, you just sit out that day, you're going to have one hell of a good time knowing what you missed out on, that you didn't participate in choppy bullshit. Last 3 days, VIX has been above here. Imagine you're trading like this. All your breakouts are failing, choppy, nightmarish mess. Try to long, it squeezes you out end of the day. Try to short, squeezes you out here. With the volatility being above contango midpoint, if you just avoid these days in particular and let the VIX get to there on the time of the month that VIX is solid, VIX is a time thing. And there's a time dependency here. And as time goes by, VIX will decay. And when VIX is down here, the market's going to be much cleaner. So number one, if you wait until just VIX is below this level and every month that number changes, that's enough. That's an overnight change. Just say, you know what? I sat out all week and didn't do much. Okay, well, let's see what the last week did. I mean, was the last week some like good eats? I mean, not really. Market crashed, stabilized, crashed up, down, up. Wow, what the heck? Up, wait, no, down, up, wait, what? Well, you really missed out on a whole bunch of nothing. The S&P and NASDAQ actually went nowhere, and you probably blew up dozens of accounts. So rule number one, this is the most important improvement someone can make overnight. Rule number two is don't ever short. Doesn't mean short setups are there, but I tell you this is one of my favorite things to teach is don't ever short, is because you should short, but you don't short the right way. Everyone shorts the wrong way. People think that longing a market and shorting a market is pretty much the same thing, except one of them is pushing this green button and one of them is pushing the red button. Couldn't be further from the truth. Longing isn't, I bet the market's going to go up and then I'm going to take profit there. And shorting is like, I bet the market's going to go down. Let me take profit there. And that's not exactly it at all. It's betting on another hidden factor you didn't even know. Longing gives you additional bonus to your trading success by allowing you to kind of be a freaking idiot when you trade, because long markets become less volatile as they go higher. Volatility is the amount of, V'ing that you get when market's moving, the difference between buyers and sellers. When they're nice and tight and close together, there's not really a lot of dips. As a matter of fact, when you're on the bull side of the market and you kind of trade like a moron, which is chasing breakouts, a lot of the times they reward you without taking a lot of drawdown. The opposite is true in a bear market when bear markets become more volatile as they fall, choppy and then volatile and crazy and like this. In a bear market, you are absolutely crushed by shorting at the wrong spot. You short at the bottom here, you will absolutely blow up your stuff before you even make a little bit of money on the way back down. Not only do longs reward you for being an idiot, but shorts punish you double for being an idiot. The way that volatility plays into the market is something most traders don't pay attention to. If you were just to randomly do something, you will have more success randomly longing than randomly shorting, because shorting will punish inefficiency. When I talk about entry efficiency is where you get in at the right spot. If you get in at the wrong spot while shorting, the punishment is bigger than getting at the wrong spot while longing. This is one of the most important pieces of advice you can do. So if you think the market's going to fall down and you're used to like, let me short it, it's going to go down, get used to saying, let me not take that short and let me just sit out on it and only practice the long side. The long side's easier to get good at. It's like the long side is like the tambourine, right? And then the short side is like a full drum set. They both are kind of drums, but percussive instruments, but one of them is significantly harder than the other. If you can't master longing, you certainly aren't going to be good at shorting. So one of the easiest things I teach people to do is get great at longing first. Even in bear markets, you're going to have tons of long opportunities, even in sell-off days. If you trade the right setups, the idea becomes that you need to master two different instruments to be good at that. Longing and shorting are two totally different styles of trading and two different skill sets. And I see a lot of amateur traders and a lot of amateurs on YouTube also just treating them like equal and opposites. Volatility is a big part of it. When I long, I'm more often likely going to throw my big fat position size. Let's trade all 3 contracts along right here. Bam, baby, let's go. But if I'm trying to short the market, it might be different. Market's volatile. I might have a couple short pivots nearby and the market's going up to it because I know it's volatile. I might split up that trade. -1 there, -1 there, and then -1 at the other pivot. So that way my cost basis is somewhere inside of this range to account for the volatility rather than taking a stab at one place. Shorts always require stage entries because the volatility is bigger. You're going to pass through a bunch of areas where you turn around. Longs, not the same. Longs usually pivot in their Vs and they're really sharp. And so you can attack a long pivot in a non-volatile environment pretty heavy at the pivot. And so trading both of them is easy. So a lot of people, when I ask people what I've taught them the best is they don't short as much. They realize that if you wait during times the markets are coming down, you actually have a significant amount of control and you're not trading in harder territory, even though it's obvious the market looks like it's selling off right now. I'm not trying to short it. I can just say, look, I'm not in the long side. That's an active decision. If market falls, look at that. I didn't take a loss, right? So these are two really important pieces that you can add to your trading diet. Get used to saying, if you want to see something change, the times you think market's going to come down, again, if you're having no success in props, try one of those 2 techniques. See if it's something that's useful to you. Be like, you know what? I normally would try to jump in on this short here, but you know what? Let me sit out. And then when it falls, don't tell yourself, dang it, I could have made something. Let me get in on that. Right? Tell yourself, yeah, at least I didn't long. I knew it was coming down, but I sat out. And get used to like watching something happen and then choosing not to take it. I do very well with that. I still to this day practice almost the same thing. I only short under certain conditions. I need confluence. I need this number to be less than half and this number to be negative, and neither of those are there, so I'm not pressing the short button today. But even if market's coming down, I've been patiently just, grabbing dips to buy. In a choppy market, the one thing that shorting does do is it allows you to take both sides of a trade. Longing is a predominantly more successful trade than shorting at all times. Short term, long term, medium term, there's always more longs than shorts. There's always more up and down in the market, always. So when you're choosing both sides, the inefficiency of trading is what actually chops you up. Here's what most of you guys do and how you lose money. Because you allow both sides of the trade to exist, statistically, you're at a disadvantage because the inefficiency compounds. It has something called hysteresis. Say that I try to long the market and I long at the wrong spot. I try to jump in right here and immediately I should have longed there, but I got in here. I'm already very inefficient. And then the long stopped me out because, well, I was way upside down, but the market, I got in at the wrong spot. And I decided to short there instead because it broke to a lower low. Hey, classically, I'm trained to say, take the short breakout. Then all of a sudden, the short stopped me out to here. And then I stopped out again with an even bigger loss. I decided, crap, I was right the first time. Well, let me jump in on this long because it did break out the high there. And you go, oh, crap, I'm wrong again. Shoot, it broke out to lower lows. Dang it. Okay, let me close out that long and let me short there. Okay, phew, I'm making money. Thank God, thank God. What the heck? I'm now breaking out of that, right? And so the idea that your loss compounds gets bigger and bigger and bigger because you're taking both sides of the market. Your inefficiencies stack on top of each other and your losses get progressively bigger, taking both sides of the market. So if you learn to just pick one side of the market and just focus on that, and then don't take the other side of the trade. Like, remember, remove the reverse button from your diet altogether. Never reverse. That's an overnight improvement for many people who try doing that. If you're a short trader, you're a long trader, don't be both. Pick one that you're good at and focus on the one that you're good at. That way your inefficiencies don't stack on top of each other and make your losses bigger by flip-flopping. Flip-flopping one side to the other is bad because you're not accepting the fact that you can just take a loss and sit out and be cool with it. You're trying to get the other side of the trade. You're a fucking gambling addict. You're going to waste your money. You actually, matter of fact, you're going to give all your money to me because I'm on the other side of your trade kicking your ass. And that's fine. Give me all your money. I don't care. But if you're trying to do good at this, don't be like that. Get good at one side and then master the other side. You'll never see me go long and then immediately go short. I'll take a long, get out of the way. And if I'm going to short in the same day, which is as rare, or I don't ever short and then go long that often, I'm more likely to go short and then long in a bear market than I am to go long and short in a bull market. I really don't ever push short by a bull market. In a bear market, I'm kind of 50-50 on my trades. I will do both, but it's efficient. I'm shorting at a high and I'm longing at a dip every single time. So just learn, at the end of the day, flip-flopping is the easiest way to stack inefficiencies, especially in choppy markets. You're not rewarded at all. You're rewarded in a flat market by buying the low and selling the high. And you got to kind of sort of understand that if I was trading both sides, I could have made this much worse. I see the market coming down. I've got no risk on the table. I'm waiting for a good long setup. This is a good long setup, by the way. Technically speaking, I could take the trade from here to here. And everything does look okay for me to take the spot here. My indicators are slightly better than they were earlier, and I possibly could take a little long. And I've been waiting for this little dip here. Let me see if I get anything good. Let me get one more red candle and see if I can get it. I kind of was talking and I missed out. So Raphael said, understanding why the market moves. Before I used to always look for shorts because I believe that was your strength, and now you switch to looking for longs and your win rate is way higher. Very cool. Yeah, and the reason win rates go up when you're just doing the long side of the market is because the market goes up more than goes down. Statistically, all things being equal, you line up with the market more often. And that does happen. Yeah, you guys are nailing it. So throw in the dab. There you go. There you go. So get good at one side of the trade. And if you're like, I want to start shorting because it's a bear market, then focus on just the shorts and avoid the longs. If you're like, it's a bull market, I just want to focus on the longs and not the shorts, and sit out on the other side. When the market's going against the direction you want, just sit out. Practice being cool sitting out. And a lot of people tell me that when they start doing that, their win rate goes up. Win rate's not everything. Win rate is not everything in trading by far. Win rate is just one part of it. It's not the only thing that leads to profitability. But win rate is helpful because it allows you to let an edge carry bad performance. Like an edge, when you have bad trades, well, we have statistical edge over time. Somebody asked for the boot camp. Here's the link to our boot camp that we do. It's only $20 for like all 20 sessions. So it's $1 a session. It's not expensive at all. The idea is that win rate is helpful to, it means that you are choosing the right direction more often than not. And in any given sense, you know, high win rate isn't a bad thing. It's not necessarily leads to more profitability, but it isn't a bad thing to win more trades than you lose. Now the next step is to let those trades become more efficient, more profitable. Matt's been saying, somebody said, LOL, Matt, I've been stealing your money. My shocking statement of I'm probably the one beating you on the other side of the trade. Being smart with your entries and exits is, now I'm missing out on a perfect long setup, by the way. This is ideally the best setup I could have taken today. But I've been talking, but all indicators are good. Right here to here is a play. 520 to 560, I think is a play for today. I have a couple of accounts I could still work on, but I feel like I did miss out on some of that. I'm probably just going to trade it later. You stop hemorrhaging money when you stop shorting all the time. Now you rarely short. A lot of people, once they go through their journey of trading, will tell you, especially pro traders, that they find more success lining up with the market than they do doubting the market that is. If the market is rallying, it's so easy to say, I just think this is the top. It's not going to come down. Well, just stay in the party until it comes down. And then that's the day you lost, and then get on the other side of the train. And same thing in a bear market. I think this is the bottom. Let me catch the falling knife. Well, let the market bottom out. I mean, since April the 11th, we've been rallying pretty much ever since. You didn't need to fish for that bottom to catch the wave up. You can be a day late to both sides of the market. A lot of people don't understand that. They're so eager on trying to get the exact pinpoint in time that they'll think it's the top and short and then have bag holding, or they'll think it's the bottom and jump in and grab it and just hold it all the way down. The efficiency is just really bad sometimes. So make sure you guys understand that. Where's Pickle? Pickle's at obedience school because he's a very bad dog. Bad dog. Chews up our stuff and he runs out of the house when we open the door. So he's at training right now for about 1 to 2 more weeks. 2 more weeks, I think. And so he's a good boy. He's always a good boy. Best boy, but he's a bad dog. So Pickle's getting he's getting schooled. So he'll be back pretty soon. We already miss him. But we had to take him to obedience school. Yeah. Yep. He's in his own boot camp. That's right. Boot camp for puppies. And so somebody says, meanwhile, the internal tilt is steadily increasing. And that always makes for better trading. Yeah, right. Also, Matt, the number one thing you added is don't short unless there's 3 solid confluences. And when looking for longs, all you need is 2, and it's been helping so much. It's very helpful. Like when people, at least the first part of the battle is identifying that shorting and longing are 2 different styles of trading. If you understand that you need to approach them both differently, you'll start to realize that where your mistakes are is you're basically, most people short incorrectly by just saying, I think that's the top, let me go ahead and short that. But having no reason to have a short confluence. For the most part, bull markets don't like to sell off. So most of the people that short incorrectly are thinking it's a high, and then they get bag holding for a higher high and then closing out. And then market does finally dip at some random point, and then they jump back in a second time and lose again. And that's really where most shorting fails, most people, because they try to think that a bull market falls. And the other time is that people see the move already happening, and then they try to jump in on it somewhere in the middle of the volatility and get chopped out. After a big move happens, you kind of missed out on it. So those are times to avoid. Like this right here, the market just fell, and how many people are like, ooh, it's probably going to be bearish. And then they've been chopped all day. Usually a short is like you didn't see it coming, and then you somehow find a pivot, and then you're in it, and then you get the trade. Once you exit, all the other newbies are jumping in trying to figure out where to get in on it. So very often, when my sit out method allows me to avoid choppiness, and I only trade where I have really strong pivots, and I usually just line up with the market. The easiest way to line up with the market, if you guys are watching my stream, is literally to just look at this top left indicator. If that is greater than half, market's bullish. That's it. That one indicator is this, all the stocks in the S&P. Call it the DD. If that ratio is greater than half, the market's bullish. For the most part, I'm almost always looking for longs. That number is less than half. We're in a bear market. So that's a pretty simple gauge you made a rocket scooter, just to know if the market's pretty bullish or bearish. One indicator, that's it. So hopefully you guys, Eric says, Matt's CEO of Trading drops some real knowledge. Respect, brother. Well, I appreciate you guys, man. I always promise y'all I'd come on the stream. I know we do the giveaways and have a lot of fun with it, but at least make some reason for y'all to be here, especially if y'all are joining at lunch. Maybe you guys have a job and this is your lunch break or something, and you have an hour to spend to yourself and you spend it with me. I very appreciate that. I make it worth your time. Of course, you guys hang out with me. I'll make sure you get something out of your hour. So how many gauges does my scooter have? Just a couple. But yeah, hopefully you gotta understand that you have to kind of like, the whole art of trading is that you have to understand that, volatility is a huge part of index trading, and in shorting long are absolutely opposite types of trading. And you have to really get good at both of them individually before you can learn to flip flop. Like to get out of a long and go into a short and vice versa requires you to be an absolute master at entering and exiting a long, because you're going to exit a long exactly where you're enter a short. And you got to be really spot on with the efficiency. You want to make sure that you're shorting at the high and longing at the low kind of thing, rather than getting caught in the inefficiencies as they stack up, making your losses bigger. Once I stopped flip-flopping in the day, like I commit to my trade, and if it doesn't work, I take the loss. And with the invention of prop firms, I can now rotate accounts in. And so some of them are losses, some of them are wins. If I line up with the right side of the market, hopefully I have more wins than losses. That's extremely important, I feel. And as a lesson, if you don't just push the reverse button, let me get in on the other side of the trade. Most people I've talked to said that was an overnight decision that was an immediate improvement. You stuck to a side, and when you were wrong, you just learned to be wrong. And that's it. You learn to be wrong. You take your loss. You're cool. Now you're planning your next trade. You're not like, oh, I'm wrong, let me do the other thing. Well, what makes you think you're right on that? You're not only jumping in on that and you're late to that, so you're inefficient there, but you're risking chopping out a second time at a bigger loss, right? So that's kind of the way I look at it. You need outro music. Outro music would be kind of cool. Well, we do have outro music to end the in the show. So yeah. What is yeah, short. Somebody said short shouldn't be taken unless you have absolute and full conviction. Right. And whenever you do have absolute full conviction on shorts, shorting is one of the easiest things you can do. Market just pops up to a resistance pivot and all your indicators are bearish, and the market just taps it and falls. Those are the most fun in bear markets when you get the lineup. Shorting is like, because it's quick. Long trades sometimes take, half an hour, sometimes 2 hours to play out. But a short trade is like it walks right up to it, grab the short, and 5 minutes later, thousands of bucks close out, right? Shorts are quick when you get them right. You're in, you're out. It's very fun to get it right because it's a quick trade. Quick trades are always the best. You make your money, you're out. But you got to be very efficient. Shorting is it's the hardest to get good at because it requires being very, very, very picky. So you don't get a lot of options to practice or opportunities to practice. But when you do master it, it is your favorite kind of trade because it avoids most of the crap. Imagine you're waiting for a long all day and then Trump tweets something and you stop out, then it comes back, you got to enter it again. Longs require a little bit more like managing of a position. A short is just like the volatility usually carries you for a quick run. And you can also trade smaller because bigger moves, you can trade smaller and make more money. With smaller positions, you don't have to put a lot of risk on the table. Shorts are very short-lived. Yeah, somebody said, Raphael said short-lived. Shorts, you can trade micros and the market falls 100 points. You didn't really have to take a lot of risk with a couple of micros rather than throwing minis at it where the risk is high. So that's it, guys. My time is up. It's 1:30 now. But thanks for tuning in. I know we have a great day here with you guys. I love being here. Thank you guys for supporting MyFunded TV and the big growth. Looks like we're getting a ton of subs here. And I think like right now, it looks like there's 30 something subs. That is very, very, very exciting. We appreciate you guys, all y'all have done for the community here, helping us grow, also helping me grow. We're about to be 40K probably by tomorrow, actually. So we might do a 40K celebration ourselves in my stream. I stream in the morning and the afternoon. So I'll be live this afternoon. I'll give you guys a link to that. Here it is. And we chill in the afternoon. I'll do some live trading, of course, and just chit chat with you guys. We're doing a songwriting competition, giving away prop accounts, giving away Rockstar memberships, all of that for this competition. It's really fun in the afternoons. So we'll be there. I'll see you guys live. Thank you, mods. Thank you, everybody. Thank you, especially mods in chat for helping chat today. Got a little messy earlier, so we're glad you guys helped keep things going and really appreciate the giveaways, obviously, every day. And don't forget to do the billion thing, guys. Head on over to MFFU.com/billion. And you guys check that out, sign up for that, get your entry to that $1 account. So we'll see you guys later. And I'm out, and I'll have a good day. We'll see y'all tomorrow.
Yeah. Charts scribbled like hieroglyphs, secrets in the mist. Candlesticks whisper, every wick got a twist. Fibonacci spiral, price dance in a trance. Pyramids of profits if you catch the right glance.
Inner circle move, shadows on the screen. Trading on the edge, chasing that dream. Cipher in the candles, fortune in the haze. The cipher in the riddle, money through the maze.
Liquidity hunts, snipers in the dark. Stop loss graves marked by the market shark. Order block sermons, preaching through the pain. Catch the ICT code, ride the profit train.